Sorry, guys. If anyone's watching this as a recording, I just gotta release this new link real quick, and we will have liftoff. Okay, gonna copy. I believe it's a new link. Audio fixed. All right. Cool. So let me just get this all set up again. I do believe we have everything fixed. If someone wants to confirm that they can hear me, that'd be great. But I believe I can hear myself, and that's a good start. So we are looking at NQ. Oh, first of all, I apologize if I sound funky. I am a little under the weather. I don't know if it's just a cold or I was negative for COVID, but I mean, there's other things going around. Otherwise, it's like a sinus infection or something. So I'll try not to. I'll try to remember to mute before I cough. But I'm not super sick, but you can hear it in my voice. I'm a little stuffed up. So we are. So like I said, I apologize for that. But we just had an audio issue. For some reason, Streamlabs was not picking up my microphone. It appears to be doing so now. So we are looking at NQ. I am trying something a little bit different. Always trying new things. So I've just got NQ up here, and this is my this one on the left is my primary tick chart that I'm using. These are Renko bars with the trade and perform algo on it, plus some other signals that I've added. So here, the trade and perform algo by itself, I'll load that up so you can see the difference. Once that's done, we'll show you. But it's got it's basically it's an order flow execution tool, right? So it's identifying things off of the footprint, which looks like this, and it's taking that information and turning it into a visual signal like a dot or a star or a color or a diamond, and that way I don't have to monitor the DOM and the order book and the book map and the footprint and all that stuff. I just have on one. I basically can do this with two screens. On one screen, I've got all my levels. With the candlestick chart. I don't know why that's not coming up. There we go. Which helps me with location and analysis on a higher time frame. And then for once we're in an area where I want to do business, like here, if I want to take this trap, that's actually a long signal that I just totally missed. It might come back and pick us up. Now it's after an impulse wave, so this is lower odds, but for a scalp long, you could take it. I technically am not going to, but it's hold on, let me just mute this real quick, because this is going to be noisy. There we go. And I think I did the wrong one. Hold on. No, we're good. Okay. So yeah, what was I saying? The execution tool, all of these signals are giving me immediate information based on conditions that have been written by myself and my coach to help me determine when there is even the opportunity for a trade. So there's two steps before I can get into a trade. The first step is determining, do I want to be trading here, and what direction should I be trading, which can be done on this. Like, everyone kind of knows how to do that. I'm going to assume if you've been trading for a while, you sort of know, like, okay, you can analyze it. It says, it looks like it's been bullish. It closed the gap. It came back to an old support. And so, is this an area I want to be taking a trade in? And then once you get to that area, then you would look here and say, okay, let's say I wanted to be long here. Like I said, I kind of don't, but let's say I did, because this just set up long. It would then indicate to me, like, here is the place where you would get long, and here's the time when you would get long. And then it would also identify where my stop would be, which is 1 point below this Renko bar, and and then the entry is at the top of that Renko bar, probably one tick after it, just because once the Renko bar closes, that's the only time when it's technically valid. So I could enter anything in the range, any price in the range of this bar. So it's still valid. I could still enter long here if I was interested in longing here. The algo, the execution tool, is saying, if this is a place you want to get long, your conditions have been met to get long, whereas here they have not, right? And so keep in mind that you need both of those things to be to like in sync, right? You need to be long biased on the on the candlestick chart first, and then you want to come in and look, well, where should I get long, or when should I get long? You'd find the signal, and then you could hit buy here at any time during this bar, as long as it's still inside of this range. And then, like I said, no matter what, your stop would go down here, and then my first target would be 10 points from wherever the entry was. So if I got long at the top here, I'll use the one that has a label. If I got long here at 82, let's say, or 83, I'd want to get 93, right? And so my first exit would be there, and then and then it's up to me whether or not I want to hold runners further than that. But the way that the algo was built when trading on NQ, it was built as a scalping tool. So sometimes, as we all know, the market goes significantly further than 10 points. Like NQ can move 50, 70, 100 points, right? So just because the algo is built to get 10 points doesn't mean you'll only get 10 points. But a good way to think about it is, if you are not long, if you're not seeing a long opportunity on the higher time frame, the chances you're going to get beyond 10 points is pretty low. It can happen, but it's, unless you're not great at analyzing targets and direction and stuff like that, if you know that, like, okay, I don't really want to be getting long at this moment, but yet the algo is saying get long, what that probably means is there's an opportunity for about 10 points, but maybe not a lot more. And what you have to keep in mind is there's only so many opportunities throughout the day, and some of them are not going to line up with your locations. So if you're going to make money regularly, you need to learn to take those trades that look like they're not going to work, right? Yet they, because you can't see a good chance of it continuing further than 10 points, but the opportunities throughout the day to get 10 points, keep in mind, that's $200, right, per contract. Like, that's, if you're trading NQ, 10 points is $200 a contract. So, like, it's, the point is, if all you did all day was just wait for the algo to signal you in and take 10 points and just trade one contract and just do 10 points, 10 points, 10 points, 10 points, and then quit when you got to like 500 or whatever, $500, like you do okay, right? You might get frustrated because you'd miss out on some really big moves if you didn't have any further analysis than that. But realize that is technically what the algo was built to do, is to identify spots where we think the market's going to turn around and where it's going to, where the momentum's going to shift. That is not what this does. This says, if you think momentum is going in the direction that it signaled in, and it signals there, you have good odds to take the trade. And that as long as you're only targeting 10 points away, you're probably going to get paid like more than 60% of the time, right? Like our metrics for the long side are actually up near 70%, 72% or so. Last week, I think we had, excuse me, hold on, let me just cough this out. Like I said, I'm not feeling great. Just give me 2 seconds. Hold on. Okay, so last week, I believe, or so far this week, I believe it was, there were 20 setups in the regular trading hours, just like this, to the long side, and 4 of them stopped, right? So 16 wins, 4 stops. Now, if you were consistent and disciplined enough to take them all, you'd have the opportunity for 160 points, let's say. If you just took one contract, took everything out at 10 points, right? Missed every single swing, right? Just took scalp. But then you would lose 4 of them, right? You'd technically make 4K, right? Because it's 20 points each. Let's see if am I doing that right? Or is it 2K? Let's see. Let me just do the math here. So 20 points is what your gross, 20 times getting 10 points. So 200. And each of those points is giving you $20. Yeah, so 4K would be like your gross. But then you would lose 4 times. And when we lose 15 points, right? The stops are about 15. So now when you do 15 points times 4 times, that's approximately 60 points. And so you'd have to take that times 20, and that would be $1,200. So reasonably, you're still, even if you just took every single trade, you'd still be up $2,800, right? For just $10, for just 10 points. Even if you missed every single swing with runners. You never had a runner, you just had one contract, in, out, in, out, in, out. 10 points, 10 points, 10 points, lose 15. 10 points, 10 points, lose 15. 10 points, 10 points, 10 points, right? Like that's how we're supposed to do it. Oh, they might, this one I can take. If they come back up here and close up here, I can actually take that long. See this little flag here is what we call an apex. Hold on, let me just set this up. So the entry would be at 77.25, one tick above. If it gets there, it'll fill me. And then I can technically add if it pulls back. It looks like it'll probably fill. Let's see if it fills. And then my stop is going to go underneath here.
Order filled.
Okay, so I'm long. So the stop goes about, let's see, this is, let's say 64. So the stop's going to go to 63. Okay, so it's not even a 15-point stop. Right? 14, whatever. Close enough. It's usually right around 14, 15, as much as 17. These Renko bars can get pretty big. Now, again, this might stop, right? And if it does, that's okay, because some of them are going to stop and some of them are not. But I want to demonstrate just what this kind of looks like. So this is called an apex, this little flag right here. And when you get underneath the apex and then you come right back up, the chances that you get back up here to the higher level are pretty high, as long as you don't have heavy momentum coming down. We did have an impulse wave down here, which is the reason I didn't take this trap. See how this one has a flag and it trapped back in here? So I skipped this purposely because I saw this impulse wave that we were working against. Now I took this one because it set up a second time, and now it's just a question of, do I get my 10 points or not? And then do I want to hold runners because I took it with 2 and queued contracts? So I can choose on, I can decide on that based on the location. But technically, when it sets up, as long as I think that I have a good chance to get 10 points, I should be taking the trade, accepting that sometimes it's going to stop. So it's coming up here to try to take my first profit. I'll take one off. Oh, it almost, come on, push a little higher, please. Give me that contract.
Order
Thank you.
canceled.
Okay, so I got 10 points. So now we're going to see if it can go just a little bit further. Now I do have a trailing drawdown on this prop account that I'm trading with. So I really don't want to let it come all the way back. If it looks weak, I can potentially just exit the trade. But you can see that when you can trade runners, you can get significantly more than 10 points. So let's just go ahead and exit there. That got back to that 93, which was the why did I have that marked? I assumed I had this marked for a reason. Was this just... Oh, it was the original target from this one that failed. Oh, okay. Whoops. Well, I guess I wouldn't have had to actually exit there. I thought that was usually when I have a green line, it's like this one where it's a higher time frame target. And that's somewhere where I wanted to be getting involved. So I'm all out, by the way. I exited that trade. I exited the runners. Like I said, not necessarily perfect, but good enough. So on my charts, you can see all these little zones. All of these are built off the what's it called? The profile. Sorry, I can't think today. It bounced off the voodoo range level. 11,685 is the voodoo range level, and it came down, tagged it, and then it's trying to bounce here. So if it does bounce here, that's actually a sign of bullish momentum, which is not what we've seen. But if you've been watching other videos, you'll see that the only sign of bearish momentum at the lows was on this bar here. See that? So that star is the, I should say not the only, there was one here too, but it's the lowest price, lowest close, lowest bearish close, where they had a sign of bearish momentum. They do have a triangle here, and that's a sign of an attempt to continue momentum. You'll see them come after the stars very often. So it's like, but this is the guy that I need to beat to be bullish. It's not the guy that came after the aggression. It's the guy that put the aggressive trade on, which is identified. Like I said, it's an order flow signal. I'm not going to get into how to build it because you don't need to know that to trade it. You just need the algo, which is available from Simon, and we trade with it in his room, in the trade and perform room. But when you have these stars or orange bars, that is a sign of aggressive selling, right? A trader or multiple traders trying to aggressively push the market lower. Normally, that's a sign to be bearish, but that's primarily the case when they happen up here. See how it's up here at the top, where at resistance and at the top of the channel, right? When you get that impulse wave, right? Big volume here, and then they try to push further, but they fail to go any further. We now have really these two guys potentially getting trapped down here if they can close a bullish bar higher than them. Now, they did, but it was pink. And the pink bars are a sign that basically when it's pink, the price is rising, but it's rising primarily because sellers are pulling their orders from the order book. So like I said, the algo is looking at the order book and the footprint, and it's telling me that once this bar closed, it evaluates and says, were most of these purchases made by aggressive buyers, or were most of these purchases in that bar made higher at a higher price because the sellers were pulling their orders, so anybody buying ended up getting filled a little bit higher than maybe where the actual aggression was. So the pink bars generally, especially when they occur at resistance or at the top of this channel, it's generally a sign that the buyers are running out of steam. It's not bearish by itself, but if you can trap a pink bar at the highs and then start getting lower, they become resistance. Okay, similar, and the purples are exactly the opposite to the pink. So purple is a sign that price is dropping, but it's dropping not because sellers are pushing even harder than before. It's dropping because buyers are pulling their orders from the order book, causing price to drop every time someone market sells, right? So while it looks bearish here, this one in particular, when we immediately turn around, it gives us the opportunity to get a scalp off just like I did. And like I said, I actually could have held a runner here, but the pink bars showing up tell me that we're probably going to at least get a re-auction. Generally, you'll get a retest or a rebid of these pink bars, and the purple bars will generally get a re-offer. See that, how it comes back into the bar? And then here, technically, this is also a re-offer of this bar, right? So we got the purple bar, they tried to go lower, they couldn't. The natural reaction is return to the range of that purple bar to see if there's real sellers there, or if it really is just that buyers pulled their orders, right? Just because the auction is built by people trying to make the best decisions to make money, when you have this uncertainty here where price drops, but there's really not any aggression, the market wants to know that sellers are actually interested here. And so when they're not, the potential is for it to go higher, right? And so that's what some of our signals to get long or to get short are built off of those auction theories. You could watch the order book and the DOM and the footprint, and you could find all the same signals, but by the time I process that from looking at all the numbers and all of the levels and stuff like that, by the time I've processed it, the greatest opportunities have already passed. So for instance, like getting in on the bar that I got in long on, I wouldn't have been able to identify that this was an important spot if I didn't have these visual signals here telling me, hey, if they just break up a little bit, they're going to push all the way back to this apex. And so that's why I bought this one. And then similarly, I knew to that we would probably get some rebidding here, a retest, because of these two pink bars stacking on top of each other. So I went ahead and sold my runners because I expected this bar. Now, we don't know what's going to happen next, right? No one actually knows. Like, a lot of people like to talk like they do, but you really don't know what's going to happen next in the market. And it's important to accept that and to realize that we are playing a game of odds. When you're in the business, if you're a trader, you're in the business of making the trade, making the decisions that have the best odds to turn out in your favor over time if you made that decision over and over and over and over again. So that's an important. You're not going to know which ones are going to go higher and which ones are going to go lower. You're just not. Let me know if you guys have any questions. I know it's a lot to look at, but now that things are kind of settling down here, we can. If you guys have any questions about what I've talked about already, or if I'm forgetting to point something out that you have like a burning desire to know about, I can answer them if you guys have questions. But let's see what it does here, because you can see that the buyers ran out of steam, so they had to pull back, and now they're trying to take this. We're trying to determine who's in charge here, and so it's not there's not really anything for us to do as they negotiate this area, but whoever wins this probably will give us another opportunity. Okay, so like I said, this choppy back and forth is us. If anything, what we need to think about is the fact that this kind of back and forth chop does not usually happen when you have significant momentum in the market. It's generally a sign of indecision and balance on this tiny little time frame. And usually after that, what happens is you get a continuation of whatever team was in charge before. So if you want to know, should I be bearish or should I be bullish? Well, at this very moment, there's not a lot to do. But if you look back and you see we had this big impulse move down, the buyers are the ones that need to work hard to hold these levels. The sellers just need to not let the buyers get momentum. So what we can do is we can see, well, where would they lose their grip? And if we take this wave here, we can find where all the volume was. I'm going to mark it. So this pink line, that's the volume point of control of this entire wave down, the big impulse move. And then we're going to do the same thing. So that's resistance right here, if we would get there. We haven't touched it yet. Then the other thing we can do is we can find the very low. We can take this little divergent wave down where we got long, and we can see that it's way down here, right? We can also take the wave up off the low and see that it's way up here. So those are separate, which is generally a sign. See how this one is way up high and this one is way down low. This is from the wave down, if you remember. And there's a pink line right there. See that? So we're just going to extend that since it ran in. It had a reaction. So Sarah chart makes it disappear, but I kind of, it's still relevant. I just don't want to have 100 of them on my screen at once, so I just have to mark the ones I'm looking at. So these, let's see, and then what was that one from? That's something else. So that's from a higher time frame analysis that I did earlier. So these three, there's one here too. These three levels are where all of the decisions were made. The majority of traders made their decisions at one of those three levels. So to be bullish here, what we need to happen is we would need buyers to solidify support down here and develop volume above this line, right? They have gotten above this lower line and now they're trying to develop volume up here, which this was a very good attempt to develop volume above the wave to the low. So that right there is the first sign that buyers actually care about this level, and they're probably going to try to hold it. It might not be time to re-enter long yet, but if they come back down here and they hold this level and they put in a sign of aggression like a diamond up, another green bar, a star to the upside, that would be a sign that they're trying to hold this, and we could start looking for long opportunities. Now, if this, you can see this bar is still live, right? It's still moving. It hasn't reached 11,695 or 11,676.75, but we see that there's a star here. See that? So that means that when we close bearish, if it closes bearish, that we will get a star to the downside on that bar. Now, if this bar happens to close bullish, that star will just disappear because it's only relevant on a bearish bar. And we don't know if this is a bearish bar until it reaches either 695 or 76.75. So, okay, so now that star has disappeared. And so you can see that while it's live, the colors, the signals are not yet relevant, right? It's only when it closes. So this yellow dot, for instance, or this white diamond, or the green bar, or the orange bar, or all of these signals, they only mean something once the bar closes. But once the bar closes, they never disappear. It just gives us a little bit of a warning ahead of time before the bar closes that, hey, if this closes bearish, for instance, there might be a star on it. Once it gets to that price, since that hasn't happened yet, you don't know until it does that it's going to be valid. But see how it's not here now? This will never be a star bar now because it closed without one, right? It won't change and suddenly become a star. It did get a triangle down, which is, like I said, a sign of an attempt to push momentum, to like continue momentum in the direction that that the powerful side is pushing. And sometimes they can produce opportunities with like patterns of signals, but by themselves the triangles are not an entry signal just by themselves. It's just it's a sign of an attempt to continue momentum in the same direction that those in charge are pushing, right? So seeing the red down triangle, if you were short from here, the red down triangle is basically what you want to see to stay in your trade. Right, but it's not necessarily a good time to short because they can get re-offered quite often. You can see like this triangle came in. You don't want to buy here, right? But it's a sign that this guy here, the arrow, got some follow through, and so when they come back in and rebid, you can get these opportunities to get a scalp. So we watch for these to get stopped out and then reclaimed, right? So the idea in reverse would be this triangle gets some continuation, and then they pull back like they are now, and then they give us another triangle. So that would be an example of like of one of the patterns that we know plays out to be like a high win rate, right? And which ones you trade is really up to you. The best advice I could give is just pick one or two and just practice it until you're really good at taking the trades. Because seeing it is one thing, like learning what you're looking for and just recognizing it in time, that's one skill. But it's a whole nother skill to see it and also follow through with putting money on the line based on that signal. It took me a long time, and I still sometimes struggle with hesitation if my confidence isn't very good. Whoops, sorry guys, I grabbed the wrong thing. Yeah, it has taken a lot of time. It didn't take me very long to understand the algo, even though I know it's really confusing looking. Once you realize that you're basically just looking at one bar at a time, it becomes easier. And then also when you know exactly what you're looking for, because it's like, okay, I know there's like 100 signals here, but I'm only looking for this one pattern, and I can just ignore the rest. All of a sudden things start to make sense. But if you try to learn it all, and you're like, here's like 10 different plays that I can take, let's see if I can take them all, you're going to struggle because like you haven't mastered even one of them, right? It's kind of like in any sport, like let's say you're a gymnast, right? You don't learn how to do a routine by practicing the entire routine from start to finish. You learn the routine by learning the moves and mastering the moves individually, and then eventually tying them together, right? Or like martial arts is the same way, right? You don't just like learn to kick someone's ass in martial arts. You learn like how to punch in this certain way, and that how to, when after that punch you can have a follow through like cross, right? Like that is kind of how you want to approach this. Isn't like, it's not like understand what every single bar means and then do whatever it says, right? No, it's like learn one pattern and then just see if you can react to that pattern over and over again and ignore everything else. Like this is technically a buy here, but it's not a high odds setup. It would only be a buy signal if you thought it was bullish. We talked about why it might be bullish, right? Because the bears have kind of run out of steam here and they develop volume above this line. But I didn't take it. I was a little bit hesitant. Good example, right? Where it's like it's a pattern I can take, but there's only certain conditions where I have to take it, and one of the conditions is bulls need to be in control, and that is not clear to me here. So I passed on it. I don't know if it's going to get 10 points or not, but I know when bulls are in control, it usually does. So one cool thing is even if I don't take the trade, but I see it work, rather than getting upset about choosing not to take it, I can use that as evidence that the bull trades will probably work better than the bear trades, or at least that the bull trades will probably work. When it's balanced, the bull and bear trades both work. So it's just because something to the long side work doesn't mean that every short signal is going to fail. I kind of wish it was like that because it would make it a lot simpler. But when it's balanced, you're actually going to get trading back and forth inside of a range. Now, in the beginning, you saw that I had two different charts showing. And the reason for that is I'm experimenting. This one that I'm normally trading on the left is the 24 tick. So to print another Renko bar up, we need to push 24 more ticks from the close of this Renko bar. That's just how they work. To get a bearish bar, we need to retrace this whole thing, right? And then go the other direction. So, and we have the estimator. You can see at 77, it'll be bearish. And if it gets to 95.25 first, it'll be bullish, right? That's just how Renko works. Well, on the 24 tick, the reason why we use that size is because most of those bars are going to be about 16, 15 or so points each, but very rarely bigger than that. Sometimes they'll be smaller. Like this one here is only maybe like 12, right? But when they have a big wick like this, where they extended really far but couldn't quite get 24 ticks down and then came all the way back up, you're very rarely going to see a bar that's much bigger than 16 points. So for me, trading NQ, 16 points is it's a hefty amount, right? It's over $200 of risk. And so to go any bigger than this would mean risking more than that on every trade, which is just for my bank account, not it's going to make me, my risk of ruin would be too high, right? So, but an interesting wrinkle is the higher time frame you go, like if I go to an 80 tick, for instance, where every bar is actually 80 ticks, the signals and the patterns will actually work more often than on the smaller one, but your stop would be huge, right? Like if I got short here on this orange bar, it's a great setup, but I'd have to get short at like 30 and my stop would have to go at 76. Like, no, I'm not risking, 30 points. What is that? 40 points, 35, 40 points. I can't risk, $1,000 on every trade. I just can't do it. So even though the signals themselves would work really well if you just use them on the higher time frame, I can't do it with futures, right? I do practice occasionally doing that with options, because with options you can have much bigger risk, because you don't have to pay a lot for them, right? Like it might not work with SPX options, but if you're using like QQQ or like something like that, where you could get into a position and even if it went to zero, you'd only risk $200, $300, like that kind of a setup, right? as long as you're not going to lose more than an R if it retraces 40, 50 points, which, like I said, that does happen. That does set up. It's just with the amount of leverage that's required for futures, I'm not able to take advantage of those because my account's not big enough. Was this actually a short? No, not really. Okay, not technically. Okay, so the opposite direction of that is to go smaller, right? So on the right here, this is actually 16 ticks per bar. So these bars will print significantly quicker than the ones on the left because it only takes 16 ticks to go from one point to the next, right? So you could, if you had two bricks right in a row, that might be a coverage of only 8 points, right? So that's a big difference rather than here, that coverage being more like 15 on average, right? But with the smaller time frame, your win rate is not going to be as good, and that's just the way it goes. Do they still work? Yes. For instance, pink bar followed by a star down is a short signal if it's bearish. And so like I said, I didn't see it over here because it didn't show up over here. It was right there. And so we got the yellow square, which is a new idea that I've added. I'm not going to go into it today. It's just a new signal I'm trying out. And that one triggered, but I'm not taking that with live money yet because I'm not sure what the patterns are yet. But I'm watching for them. But had I been watching the 16 tick, it actually triggered short here, and it was at location at the voodoo range level. So if you're fast and you're good at being patient for location, the smaller time frame can actually give you some really good opportunities because you can see with this one, if you knew you were bearish and you wanted to be bearish there, but you just needed the trigger to show you that aggressive traders were getting involved, you'd know at like 82.50, let's say, and you could put your stop at 92.50. So you'd have a 10-point stop rather than a 15 or 16-point stop, and then you could take some off at like 8 points here, and then let the rest go, right? And then even if it came back on you, you would lose anywhere near a full R. You'd maybe lose 2 points on one contract or something. So, like I said, the trouble is if you try to take every single one of these setups on the 16 tick, you're going to get smoked a lot because it's going to stop out just regularly because everything has stops sometimes, right? And it's going to stop out way more often than the 24 tick. But you're also going to get a ton more opportunities, and the stops are going to be smaller, right? And that difference between a 10-point stop and a 16-point stop, that if you take two of those, that's the difference between an R and 2 Rs. So for me anyway. So I think what I'm trying to get better at is using the higher time frame to determine momentum and direction, and then looking at the smaller time frame to get a little bit more precise with where I want to take the trade and where I want to skip trades. Because, for instance, here I had a potentially lower odds setup where I have triangle up followed by this yellow dot. It's a pattern I've seen work, but I don't have the metrics on it yet. I don't know how often it works. So if I then go back to the 16 tick and I see that I have a strong setup, pink bar star, that works all the time. Okay, I shouldn't say all the time, a lot, right? 60% plus, and probably 70% plus if you know it's bearish. That's a good setup. And so if I can see both of those happening at the same time, I could actually get in with a 10-point stop and have a killer risk reward. Because the setup is valid here on the 24 tick, it's just not good enough for me to commit money to, right? But it's valid. I know it works often. On the 16 tick, it's valid, and I know the metrics are good. So again, I wouldn't take it just because it triggered on the 16 tick by itself, because as you can see, there's nothing going on here. There's no reason to think bullish here. But on the 16 tick, it's like, hey, there was a quick aggressive trader that tried to take over someone who really pushed hard to the downside. It didn't work, and it's not surprising because on the higher time frame it's bearish, right? If we got a bearish signal though, like this, and it wasn't deep in the hole, it might make sense to take that for a scalp, right? Because that's actually a sign of bearish momentum. So taking this with a, I mean, look at this. This stop is tiny, right? You'd be short at 47, and your stop would get 56. We're talking 9-point stop. So you could already be out for 1-to-1, more or less, right? So it's like very quickly you could build a pretty good day just by being sure that you're waiting for the 2 time frames or maybe even 3 time frames to align, right? So if the 80 tick says, hey, it was bearish up here, which it did, right? And the 24 tick is like, hey, it looked pretty bearish up here. We'll then go to the 16 tick and just sell all the bearish signals. So like I said, it's a new idea, primarily for momentum trading. I think for mean reversion trading, sticking with one time frame is probably better because you're going to get confused and potentially overtrade if you tried to mean reversion trade a very fast. It's not that you can't do it, right? You can. You just have to be very, very quick about it. You'd be targeting 7 or 8 points, and like I said, maybe that works in a really tight situation, but you don't really need to go that tight as long as you're getting extensions of 20 to 30 points. You don't need to go so small, and when you go small, you're going to get a lot of you're going to get more false positives. That's just natural. That's just the way it is, right? Like I said, the positive is those false positives won't cost you as much. Those stop outs are going to be cheaper. Okay, so on the bigger picture, you can see that we reached back into just above yesterday's close up here. We reached just above that, right? We couldn't quite, we worked off this after hours consolidation. We ran into that and rolled over, retested the voodoo range, negotiated this one, retested voodoo range, and broke down, right? It makes sense to be bearish. It does, right? Big impulse move overnight, rebalance inventory, pull the rug. So I'm not fighting the idea that it's bearish, but when you're scalping, you can actually take longs from support and get 10 points pretty often as long as you get the signal. So if I get a signal here, I can still long. Like, see here, this one already triggered on the 16 tick. It has not yet triggered on this. Right? But you can see that they're trying. I wouldn't take this by itself because it's on such a small time frame. But if we got the 24 tick to put in a strong buyer and then the 16 tick triggered again for a second time, maybe after testing below this, that might make some sense because we're at a low volume node, we're at a previous support, and the chances that we get 10 points are better, right? Now, we do have this big buyer that got stuck here. That could be a big problem. 4,369 contracts on the offer, right? And that occurred, I've got that other indicator off, so I don't know when that occurred. I had an indicator that showed me those with an extended line, but I changed it. So it either happened here or it happened, probably here. Oh, wait, no, it's down here. Right here. This was it. High volume. Okay, so we are now under this. It does still work. Cool. So see that little outline and the green extension? That's this. Right, and so we traded up above it, and now we've traded below it. And so once you give those up, if we can't hold this, then the bulls have a problem. Right, we have to, for the bullish moves to start working, we're going to need to retake this. So I don't really unless you wanted to scalp into it, which I'm not totally against, but not thrilled about, you're much better off not longing and then waiting for the short up here, in my opinion. The trouble is they might not set up on this time frame. So the other thing to do would be to take, oh yeah, pink bar diamond. That would have been a short. So like I said, I'm still kind of getting used to the idea of using both of these. But had I seen that, that's exactly what you'd want to do. Is you'd be looking short here, not long, and you'd take this because there's no setup here to the long side because it's bearish, and so you could technically take this bearish signal for 8 points. Yes, that's how you do it. Okay, let me run to the restroom, you guys, and grab a drink because my throat's hurting a little bit, and I will be right back. All right. So yeah, once we close, I'm going to take a look and see how this would have worked in from a momentum standpoint. Because like I said, unless it's super confusing to me, I think it could be something I can add. But we'll see. I don't know. It might be too hard to follow both. But we'll see. So again, on the bigger picture, this is an area that the buyers really do need to hold this. See that? It's like it's an important level. So if they don't hold it, it doesn't mean we should buy though, right? Just because like we don't just YOLO because it's potential support. But maybe a better way to say it is if buyers don't hold this, it's going to potentially trigger some increase in momentum. You would expect buyers to try here. And you can see on the smaller time frame, you can't just take every trap, right? This is called an apex trap, where it gets underneath an apex and comes back in. This one is going to set up as a trap too. The apexes are the only signal that they're a little bit delayed. It takes 2 or 3 bars before they form. But you don't. That's okay because you don't use them for an entry. You use them for location. So once you've got this apex, which happens like here, it shows up. Then you trap back into it. If it was bullish, that would create a reversal. But on this tiny little time frame, they're not going to work 70% of the time like they do here, right? So you have to change your strategy if you're going to introduce other time frames, like smaller time frames. You'd wait until this gets trapped out. So let's see, where is the volume on this? Yeah, right there. Okay, so the buyers would need to see how there's a dashed line here. That means that the volume got shifted down. So I just had to double check. But that's where the volume on the downside is. It's this red bar. It's also marked red for the same reason. So this red bar here is the most important bar for the bulls to target. They need to develop volume above that bar to really have any chance to hold this level. There was one similar up here that was the same way only in reverse, right? It was up here, and I said if the buyers couldn't develop volume above it, that they would end up losing it, right? And so they tried, and then they got the scalp we got, and then they reversed, and that's what happens when you can't keep volume above these lines. So right now we would need a buyer to push above this level. And you can see that this bar would close at 41, which is below that level, right? So that's significant. That means that even one bull bar is not enough to get us interested in buying, right? So I'm not going to buy that. It may work, right? It may. That might be the low, and that's okay. If it is, what should happen is we develop volume above this. In other words, we close another bar bullish, and we get that yellow line above the white line here. This yellow line is where all the volume is in each bar. And so buyers need a bullish bar to close up here and get the yellow line above the white line, which is where all the volume was on this red bar. See, this yellow line came down. It makes a dash that's yellow every time it interacts with a bar. And then now they're trying to bring volume up, but they're running into sellers who are protecting this red seller, right? There's an aggressive seller in there, right where that pink line is. That's the way to think about it. We can get behind them and still be bearish. It doesn't, just because you get above it does not mean that it's immediately bullish. But what I can tell you with a pretty high confidence level is if we can't get above him with volume, it's not bullish, right? It's bearish until that happens. So we could be looking for a bear signal here if we're looking for a continuation of momentum. This is a good example of a spot where we might be able to get a trap to the downside, for instance, like venturing up here and then rolling over with a star or an orange bar. That kind of setup is the kind of thing I would expect to see down here at the 16 tick. But really, I'm not going to fight this momentum without a trade that sets up on the higher time frame, on my normal time frame. The only way I'm even going to think about using this is if I'm going with momentum. Otherwise, I'm just looking at the one on the left. So realize that if you do know the setups, you might see some here, like this was a trap back in. Oh, well, no, it's not. There's no apex here. So there's no setup here at all, actually. This one was along, but against momentum, and so it failed, not surprisingly. And so they would have to pull this back again and then bounce again to get it along. But notice they are testing above this volume level. They're trying to re-offer the wick of this important red bar. And then I'm watching this yellow line and the yellow dash to see if they can shift it up. And then we'll be watching to see what happens when that occurs. Notice there's a blue dot that's potentially going to form here if they close bullish. Remember, it's only valid if it happens after the close. So we have to look at it once it closes and see if it's still there. But that would be those. Okay, so I guess I can explain them a little bit. When you are going with momentum, those blue and yellow squares generally are okay entries. If you're going against momentum, they are great opportunities for traps. So, for instance, if this is bearish and we close this with a blue square, the opportunity then to get set to, it's basically like, it's like a layup to short against that. Oh, it disappeared. Oh no, it's still there. Oh look, they got that. See, look, the VPOC got pushed above this pink line. See that yellow dash. So they just developed volume above it. That's the first sign of bullish aggression that we've seen since the impulse wave back here. So they're trying to save it. We don't buy it yet, right? Even though we got the blue square, and technically they could just V it up and then I just miss it. Okay? I'm okay with missing trades if it didn't set up on my process. My process now requires them to come back and then bounce with a sign of aggression, like another green bar or a star up, something like that, or trap back in from down here. What I don't know is whether or not a green bar and a star on the chart to the right, the 16 tick, I'm not sure if that would be valid or not. I have not tried that yet, and it's something I'm going to review at the end after we close, because I'm thinking it might. It might be a good way to get into trades. I just don't know how often they work, and that's what I'd like to take metrics on. So if you want to stick around for that, I will show you after close. So, but like I said, we did get volume above where all the sellers were, which was this pink line, and that's extended by the white line here. We got, if you look here, I'll get close and you'll see. We got that yellow dash on a bullish bar that's closed. We got it above the pink line. So right away, if you're bearish, you want to be out of your bear trades there, because while it could rebid, the potential's here for a V reversal, right? It's not a good enough potential for me to buy yet, but it's definitely a good enough potential to not be short. Excuse me. But remember, we've got that high delta print, and it's aligning exactly with where this Renko bar would have to close to be bullish. And we had a ton earlier today. We had a ton of contracts, 4,369 more contracts on the offer than on the bid. So some big player bought aggressively there or exited short, right? I don't know if they entered a long or exited short, but they bought aggressively there. So it would not be a surprise if that level is important. Let's just say that, right? We don't really know how that guy's feeling right now, but I'm guessing if they can't retake that, we're gonna get a hefty pullback. So that may induce a V reversal. It may not set up for us, but the only way to catch this would be to use the what's it called, the absorption arrows, which again is something that I'm not confident about yet. I know they work. I don't know where they work the best. So again, something to look at for sure. But there's blue and red big arrows that look like this, and that is a sign of absorption. Generally, absorption is best played on the retest, but sometimes they V reverse just like this. And like I said, I don't have a great way to tell you when they're going to be V reverse and when they're going to act as support. Couldn't tell you. What I do know is when we get past them and they don't cause a reversal, that the momentum is really strong. So it makes sense to try to get a reversal after one of those arrows. Because if you think about it, what's happening is sellers are selling into a passive long. It's kind of like an iceberg, but it's not necessarily one guy. It's just that even though sellers are pushing big volume into the low like this, see that big volume, and there's like a big spike down here, they were unable to make much progress because there were passive buyers sitting there. So it could be long at that very moment. We just, like I said, I don't have, it's maybe 50-50. And that's not good enough for me to, with futures. I need like 65% accuracy. Hard to say whether or not they're going to give us a chance to play this. They might, but they don't have to. But there's really not a lot to do right now. Now, look on the 16 tick, they gave you a bearish signal. We could technically get short here. It's pretty aggressive. The problem is we've broken an apex to the upside, and that's usually a time to not be bearish. When you're breaking and closing above those flags, those purple flags, it's usually a sign that bulls are pushing with momentum. What I don't know is whether or not that matters on the smaller time frame, considering it hasn't happened on the bigger time frame. I don't know the answer to that. And like I said, that's something I'm going to look at after the close when we evaluate how I could have caught more trades using the smaller time frame. But this would be an example if you want to be aggressive. If you're bearish and you want an aggressive entry, that's it. Like right here is the aggressive entry, and the stop would go as low as 57.50. I might want to put it up at like 60, so I would, in case they try to come up here and test that. But technically, the algo says if you want to be aggressive, that's where your stop would be, is above that orange bar. But that's on such a tiny time frame that like you really do need to know that momentum is bearish. And I don't have evidence really that momentum is bearish because they've got the absorption here and then they got volume above this pink line. So generally that means that momentum's not very bearish, and if anything, it's balanced. And so in that case, an aggressive momentum sell like that probably doesn't work. But let's see. Maybe it does. It hasn't. It would not have stopped out yet. It would still be active. And so technically you could get like a 4-point stop here by shorting now with your stop right up here. It's like, I don't know. Could you get 8 points on it? I mean, I don't know. Like I said, I want to know. I want to find out. I want to research it and see. Is that something I should be doing? Maybe like just in this kind of situation where it pulls all the way back but doesn't quite hit the stop. Like, see how close that is to the top of the orange bar? Look how close we got to the stop, which would have been right behind that, where the arrow is, right? Your stop goes like 1 point above that. So the closer your entry is to that level, the smaller your risk is. The likelihood that it works is unknown, though, right? I don't know how often it doesn't stop out. Looks like this time it would have stopped. I didn't take it. But I'm observing it because I want to know, like, does it usually stop out and then roll over? Right? That could happen too. Maybe the better pattern is see the signal, see the stop get hunted, and then take it short. Because shorts can be like that. Okay, they get above that heavy ass. Now look, this was just a V reversal. And so like I said, you can choose to be frustrated about not buying this. because you could say like, oh, it was at an obvious level, it was at an LVN, we had absorption, right? But if you're going to take every single one of these, the only way you're going to catch this, right? Because I didn't even have a great signal down here on the smaller time frame. So the only way I could catch this is by literally buying every time I have blue arrow followed by white diamond or blue arrow followed by green bar, right? I'd have to buy them all because I don't know, or maybe only the times when it interacts with a key level like an LVN, maybe then. One thing that would be interesting is to see if these blue arrows that are absorption, if seeing those on the LVNs might be significant. And that's possible. That's possible. That's something we can look at too. But I'm not shocked. Like I said, I told you, it makes sense, right, that they would save this. Wow, my computer's really lagging. It makes sense that they would save this level. It makes complete sense that they would trap underneath here and then save it. Wow, what's going on with my graphics card? I don't know. It's usually pretty fast. And so now that everyone knows that they're trapped, all the shorts now know they're trapped. And so now momentum's to the upside, right? Now you don't want to take shorts, in my opinion. But notice this one clearly failed, right? So you would have been wrong if you shorted that. But the opportunity was there to take it with a really small stop if you thought it might be bearish. And so, like I said, I just don't know how often those work on the smaller time frame. I know how often they work here. And to the long side, that's something like 60%, but to the short side, it might be half that. And like I said, I know that that you get more stops on the smaller time frame, but I'm just curious if you align location, momentum, and all those things, can you improve that enough to make it usable? And I don't know. We're gonna find out. So where was all the volume on the way up? In the middle. Okay. So like I said, this was our sign that things might be getting bullish. We got that blue square and we got the yellow line above the VPOC of this wave down. It's not usually the time to buy for me. I don't have consistency buying there and seeing this. It doesn't happen very often. But what usually does happen is once we run into some resistance and we pull back, that pullback's usually buyable. What I don't know is where that's going to happen. And we might just run out of time, right? Notice we've run into another fib level drawn from the Buddha range levels. Those levels are really cool, you guys. I'd highly recommend you keep an eye on that or just draw them yourself. I teach you how in the video about the Buddha range, but see how that like tags those dashed lines and then has a reaction? That's really pretty useful, if you ask me. So it's okay, so there's another arrow. So let's see. It's at an LVN, right? I don't know if it's going to print yet. The bar has to close first to know if it's actually going to be valid. We have to see the bar close with that. It might disappear by the time it closes, in which case it's just a regular bar. But now, see, it's warning us that if it closes bullish, it'll probably have a white star, suggesting somebody is aggressively trying to buy this. But if they don't succeed in pushing it to 77.25 before 59, that star will no longer be there. Because the star not only needs an aggressive buyer, it also needs them to close it bullish. But like I said, we have it set up so with Sierra chart, so it warns us so we can prepare. If we have a signal to be long there, we'd know, okay, 11.677.25 is where we want to get long once that happens, and you would not get filled unless they get there. So that's why we have it alerting us to it before it prints. But the confusion often is that people see it on the live bar and they're like, oh, it was a star, and so I got long. It's like, well, it warned you it could be a star, but it needs to actually reach the bullish level before the bearish level in order for that star to be valid. And that's a big confusion for a lot of people. It's like, the warning is nice, so you can be prepared. but you have to get used to watching the signals so you know when to trust them, right? Because once the bar closes, it's never going away. Like that'll always be a star, right? So now it's valid, right? And you can see how sometimes it goes pretty quick, and so if you didn't have that warning, it might be too late. Now this is they're putting it in way too high for me to personally buy it, but let's say you were looking for that as a sign to buy, you'd want to know ahead of time that was going to happen. Otherwise, it could just go without you, right? I personally don't want to buy stars that occur at the top of this shaded channel. Now, it is the end of the day, so if it's bullish enough, it can still work. It's not like they always fail, but the stars that show up down here are way better than the ones that show up here. Like, I would rather buy this, even though it didn't work. The odds of this working out are way better than this. But I will say, when this does work, when the ones on top do work, it's a sign not to be short. So back to the Voodoo range level. And again, like, levels aren't everything, but it is, I find it very helpful to have a general sense of how far we expect the market to go if things are balanced, right? You can see it's not perfect, right? We went to like the halfway point between these two levels here, and this one obviously overshot it a little bit. But do you get a general sense of, like, is it balanced or is it bearish or is it bullish? I do. Like this and this, it's about one Voodoo range apart, you know? These rotations are normal size-wise, right? Some of them are going to line up perfectly. Some of them aren't. But the important thing is to recognize, is this normal price action, or are we in some sort of a crazy squeeze, right? If you can't come back and retrace, like, see how we couldn't make it to the Voodoo range level, and yet we reversed? That's a sign that bears are actually trapped. So it potentially could squeeze here, because it should have been pretty easy for them to get to that level. Yet they ran into the edge of a purple pivot and they bounced. And those are not usually strong support if it's super bearish. And so the logic behind that says it's not super bearish. So if you're holding puts, like, and you see that, yeah, you probably want to get out. And that's why I said way back here, once I saw this, I knew, don't be short. I just can't buy straight up. That's not in my playbook, because my stop would have had to go down here. Could I do it with calls? Yes. I can't do it with leveraged futures. I guess technically I could have done it with like 1 micro. But like I said, I'm going to investigate these blue dots and yellow dots more, because as you can see, when you're right about direction, they do work really nicely. And it's a new idea that I had that I just haven't had time to study yet. So I've got them on my chart. I'm watching where they work and where they don't. And I see some exciting ideas, but they don't always work, obviously. So I need to drill down when to use them and when not to. But so far, what I've seen is when they work, that's the direction the market's going. So that alone is pretty helpful, even if I don't use it as an entry signal. But you can see that might only be true for one wave, one rotation. Once you get a yellow, it goes down. Once you get the blue, it goes up. If we get another yellow, it might come down, right? So if they show up too often, like that, if that's all it does for me, then it's like that's not all that useful. But we'll see. There may be other patterns, like getting arrows before them or getting triangles in the other direction. Like I just haven't studied it yet. I have to backtest it. I'm not just going to throw money at something that I think might work. It needs to actually, to be part of my process, it needs to go through a significant amount of backtesting first. Yeah, see, this is just not my market. And I know a lot of people get upset when they get this and when they miss this, and all they want to do is short every bar because they missed it. Don't fall in that trap. just accept that the people who made money down here buying this are the same ones that are going to pay you later when you're patiently waiting for your setup. So let them have this one. Don't give them back that money, right? And I'm not saying there's anything wrong with someone buying this and putting their stop at the low. It's just not my trade. I can't take that much risk, right? To make this work, again, to make this work, you're getting long at like 47 and your stop needs to go at 25, 24. No, I can't take 25 points of risk on every trade because I don't think this is going to happen very often, right? If you have some other read that tells you this is going to happen here, by all means do it. I didn't have that, right? And I know that I'm much better off waiting for the high odds scalp that's going to give me 10 to 15 points 70% of the time, rather than trying to guess that this is going to be the time that it goes 50 points. You know, like these big swings are fun to catch, but if you're only right about them 30% of the time, it's going to be really hard. You're going to have to be really solid psychologically to handle all those stops. And that's just not the way I trade. I need consistency where most of the time I buy, it works. Most of the time I sell, I'm getting paid. If most of the time I'm trading, I'm losing, psychologically I struggle with this amount of leverage. Like I said, I could do it as a swing trader. I have a really hard time doing that as a futures trader. And I'm not alone when I say, I know a lot of people feel the same way. When you're using high leverage, if you can find a system that pays you frequently by just doing the same thing over and over again, why trade anything else, right? That's the way I think about it. Like, I don't care whether or not I get it set up here, right? Because I'll get my setup later. It doesn't have to be right now. And in the meantime, I can learn and possibly see something that becomes a pattern that I then research or then build, like the squares that I built, right? Like, there might be a day when I can buy this because I have the metrics to do it and I know that over time it'll work, but I'm not going to trade it right until I see those metrics are real. Otherwise, I'm going to get it and it's going to start to pull back and I'll take a small loss on it and then see this and then I'll tilt. Right? So I'd much rather just wait and not trade it and be like, I wonder if that happens often. What was going on here? Let's see where else that happened. Oh, look, it happens 20% of the time. I don't want to do it. Right? If it's only going to work 20% of the time, it's not for me. I don't care what your risk reward is. I can't handle that kind of volatility. I won't hold it. Right? I just know how I trade. If this only works 20% of the time, I will net lose trading this because I will let it go way too early out of the fear that this is one of the 80% of the times that it's going to stop me. So I don't care if you get 10 to 1 when it works, right? Then you have to hold to the stop or to the target every single time to get that metric. And that's tough. When every point, is $20 more. And trading 2 contracts, every point is $40 more, right? So I realize that shouldn't matter. We shouldn't think about the money, but the reality is, psychologically, I can't handle needing 50-point moves to make money. I need to be confident that if I continue to run my system, as long as the market's moving in 15 to 20-point moves, I'm going to catch some of those. And I can miss every one of the big swings and still make money. Because I've got a system to keep me from shorting this. Notice, I knew not to short, right? And even though this is technically a sign of aggression, until here, let's see if there's even an opportunity for a short here. They'd have to move. Yeah. See, they haven't shifted volume up very much. The volume of this move up is still way down here. So you could technically scalp short, and this is exactly where this might be helpful. This smaller time frame is something like this. Right? So now that you've seen that, then you'd be like, okay, I can take a short. Or once you've seen this, it's like, okay, now I can take a short down here. That might work. But I don't have a reason to short this time frame until they either get underneath this and then set up, right? Not just get underneath it, but get underneath it and then set me up for a short, like with a trigger and a signal and everything. Or they push higher than this and then roll over and push volume higher. Then I can short it. But I'm not, notice I'm not trying, as I'm trading, I'm not worried about where the market's going. Not really worried about it. Like, it might seem helpful to know, but most of the time, we're going to be right maybe 50% about, like, at best. Like, some of us less than that, right? So, like, I could say, you know, okay, well, that looked like a bullish bounce. We're probably going back to the close of yesterday. Whatever you want to say, right? Chances are, sometimes you'll be right, but a lot of times you'll be wrong. And because of that, getting paid for that estimate is really tough. So instead of trying to guess that the market's going here and I'm going to figure out a way to ride it, instead, I'm just going to wait for the locations that I know I want to trade in. I'm going to wait till we get there, and then I'm going to decide whether or not we have momentum in one direction or the other. And then I'm going to wait for the algo to tell me that there's a good opportunity, and then I'm going to take it. Right? And I don't care if it's going to go to high a day or low a day later. I'm just going to wait for those conditions to be met where there's a setup. And when there's a setup, I'll take the trade. In the meantime, if it doesn't bother you to think about where the market's going, you can. But for a lot of people, and I fall in this camp too, if I'm down here, let's say I'm down here and I'm like, wow, it's really bearish, right? Like you're seeing this and you're like, dude, it's super bearish, right? I think we're going, you start thinking about like how far you're going to go. Guess what? You're not going to catch any of these longs. You're just not. And you might even short this. And it might work, right? It might work. But realize that you didn't need to think that the market was going down here to take these little moves. You can take advantage of all these rotations with no care whatsoever whether or not the market's actually going to the low or to the high. That is actually the least, it's what everyone thinks they want to know, but it's actually the least important. What does matter is, do I have an opportunity here, right, that has high odds? Is this a location I want to be trading? And only then should we start to be thinking about what's the likelihood that now that we're at that location, what's the likelihood that momentum is going in that direction? And then once you decide it is going in the direction you want, now you can think about your target. You know, the market might be going back to yesterday's high. Well, if I had a long signal here, that's probably where I'm exiting, right? But I'm not thinking about it down here like, oh, market might be going to yesterday's high. I need to get in now. You're going to get stopped out doing that, and then you're going to miss all the good opportunities, right? Because you need, if in my opinion, what I need personally is something that works a lot, right? And my guess of where the market's going to go at the end of the day, it's not good enough, and I'm okay with that, right? I might know maybe 40 to 50% of the time, maybe, but yeah, I need to do better than that to put money on the line. So I've learned to like not totally ignore it, but to try and focus on what I need to do about it rather than spending all this time analyzing what I think is going to happen next. It's just, would I be a buyer here? Then I can buy it, right? Like this was technically a buy. It was, I'm not going to buy it. This is like the last 4 minutes of the day, so I'm not going to buy it. But when it's this bullish, you can just start buying these signals, right? See how this one was way up here and it didn't get, okay, so I'll show you. So remember I said this one, when we were back here, I said this one was so high up. Here, let me get rid of some of these lines. Here, let me just We'll just take everything off. I said that we were so high up. Why isn't this one deleting? Oh, I didn't mean to do that. Fuck. I lost the big one that I wanted. Okay, whatever. I'll find it later. So I said that we knew it was bullish here. We wanted it to set up. It didn't, right? It then gave us a signal here that said it's probably going higher, but it was at the top of this channel here. If there's ever a time to be cautious, it's the first time you get up there. Okay, like this. Different signal, but same idea. Right? If I see this exact bar down here, all good. Like this, that's a good sign. Not here because we just dropped 75 points. But if this bar is over here, totally cool. When that bar is way at the top of the channel, it's dangerous. It's vulnerable to get trapped. And so what they end up doing is they immediately reverse it with one of those yellow squares that I'm going to talk about in a minute. Right? And then it's this one that you want to buy. Why? Because it's down where it belongs, down here. Now, this one fails, and that's okay. Yellow line again. It almost gets 10 points, but not quite. Maybe it did get 10 points. Doesn't matter. Then we get this. So if you're still bullish, it's in the right location. I did not think that we were bullish after seeing this. I saw this as an impulse move. I wanted a higher odds setup, right? So I skipped it. This one confirmed that we were bullish, just like this one confirmed we were bearish. But now I want to set up, and I want it to set up down here again. It did not give me the high odds setup, and instead it gave me this dangerous setup up here, which is just like, hey, there's an aggressive buyer basically at resistance trying to push. Okay, that's good to know, but I'm not going to buy it personally. When it then pulls back, once it's done this, right, and this didn't get trapped, now this same signal can probably be bought because shorts are totally stuck. If you think about it this way, if I know that this guy at the top of the channel only works when momentum is super bullish, even if I don't take it, that worked, right? Bears are screwed. So now all bullish signals can be bought, right? It was just the end of the day, so I didn't take it. But that pattern repeats over and over and over again, right? And so now what I want to know is, what I want to know, yeah, see, I totally could. I guess it wasn't too late because I can always trade the last, there's like an hour yet where you can still be trading. I didn't want to buy it into the bell. But it was valid. And that kind of happens a lot. I tend not to take those trades at the last 10 to 15 minutes. It feels so frustrating to give away a stop at the end of the day after being so patient all day, right? It's just psychologically difficult. So what I want to know is, in these situations where you have impulse move down, that V's off the bottom, right? What I want to know is, are there any hints on this lower, faster time frame that could have alerted me that the V was possible? There may not be. It may not exist, but I'd like to know if there are. So to do that, we'd have to go back and find a bunch of V's and see if there's any pattern, right? So first, let me just look at this quick and see if there's any potential pattern. So the first thing I'd look at is, did they trap an aggressive seller at the low? No. There's no aggressive signal on these bars. Nothing. They did get a divergent volume wave. There is less volume in this last push than there was from here to here. So let's see where the volume was there. In the middle. Okay. So that's piece of information number one, right? Did any of the shorts fail? This short worked. This short worked. This short worked. Okay. Did any of the longs fail? All of them, right? This one failed. This one maybe got 8 points, but let's call it a fail because it didn't go very far. And this one failed, right? All of those things would tell me it's bearish. Okay. Oh, and then this. In the past, I have noticed blue arrows on down bars. Put the line at the top. If we can retake this, you can get a squeeze. I don't see another one of those at the low. It might not be very helpful way up there. Okay, so now what happens next? We get a triangle up. We do get a green bar here, but no other signal. We go straight up and then get pink bar, orange bar. This is typically a short if it's bearish, right? This short worked, this combo worked, this combo worked. It's another combo, right? A 2-bar combination. I pointed it out. It failed. Right into that high delta. It gets all the way back up to this line where I said it could squeeze if it goes higher. At this point, it looks like the opportunity's missed. We get this guy. Is that? Yeah, that's that one that I didn't take because I thought it was too dangerous. He shows up right at that squeeze point. Interesting. They squeeze like mad right away. Okay, we get the reverse signal, yellow arrow on a bullish bar. So if we can save this after a brief test, it's still bullish. If they get volume under this, which happens right here, oh, you have to trap someone up there first. So yeah, so the way this works, same thing back here. It's exactly the same as this, only opposite here. I'll start over. Let me explain it one more time. This is the one that worked exactly how it's supposed to work. You've got an arrow that's bullish on a bearish bar, a blue arrow on a bearish bar. As long as you get traders committed down here, if you then break and hold above this, it's usually going to squeeze. Okay? First, you need to trap somebody, though. So this is the exact opposite. So let's see what happens here. Exact opposite signal. Did we get any buyers above it? We got one. They tested under it with 2 bars, 3 bars, 4 bars. So they tried to reject. And they squeeze again. So that one did not work how I would expect. Primarily because they didn't trap anybody up there. They only trapped 1 bar. And then they immediately rejected. So now that we've gotten up there, now if we lose it, it might be worth something. But so okay, so that's not it. That's not a very useful signal. It didn't work how I expected it to. Let's see. 3-bar combo here. And then nothing down here. Now, where was the volume on this? Because remember, the volume on the way down was near the bottom. Where was the volume on the way up? Okay, so that might have been a reason not to take this. Is that the volume was too close to our entry, yet we're above it. So that would be a reason to expect this to act as support. What about the volume on the entire thing? Way at the bottom. So for this to actually be bearish, we'd need to push price under here or develop more volume up above and shift volume higher. That happens here. See this dashed line? It shifts. That's the volume shift. So here, volume to that swing low is there. Volume to the high has shifted up. So now all they have to do is develop volume down here, and they can potentially finally, drop it. But it's not bearish, right? There's nothing bearish about this yet. So I'd say here, at least from just the 16 tick, there was not enough evidence that this low was the low, right? Whoops. I'm doing too much. That unless there's something, where's this? Oh, interesting. Okay, so the whole way down, once you got above that, and you got above, oh, I guess this bar continue, this wave continues. You could use any of these really. Once, for sure, once you've developed volume above this line and this line, which happens here, you don't want to be bearish. I knew that from this too. Once I got this signal, I knew not to be bearish. We just did not get a retest. And sometimes that's just how it goes. It just does not come back. So let's see if there's potentially a pattern here then. Because I don't see anything on the 16 tick. I don't see anything at all. No structure, no... Oh, wait. Is there a trap back in? See, this trap back in did not work. There was. This trap did work. The biggest difference here is that the volume on the down wave to here was above your entry. So your entry in this case would be here. And the volume is this pink line, right? And your stop goes where the white line is. How does that look different once you made the second one? Oh, okay. So now the volume is here, entry here. You've got 2 bars to scalp back long. I mean, maybe that's useful. You also got underneath one of these blue dots and a diamond and a star. We had all 3 of those trigger there. They got underneath it and then rejected. I think the reason it bounced was location related. Right? And you're not going to catch every move. But when you have that location and you get, see these blue arrows? This is the other thing I want to look at. So one thing is blue squares, getting underneath them, trapping back in, that might be a good opportunity. The other thing I want to look at is when we get these blue arrows, and especially when they happen at location, and especially maybe when they happen on a down bar, I wonder if either blue squares or diamonds or green bars or some kind of signal over here, if one of these, can, and maybe even a star, is good enough to expect higher. So let's go back and see where those showed up. And see in the last few days if there's possibly anything to learn from those. Let's see. We can technically look on both. So there are red arrows on the top or blue arrows on the bottom. I'm primarily interested in the blue ones. I'm learning that shorts have very different qualities than the longs. You can find something that works really well to the long side and it won't work for the short side. Okay, so here's 3 of them to the short side, right? So this is 10:30 Central. So that's London close. These little outlines, these yellow outlines, are a sign that there's a lot of volume. And then there's also a delta event here, right? So what was happening here, let's take a look at this. What's happening here is we made a high, we pulled back, right? At 10:30, let me see. It's 11:30 on this chart. Okay, so we were making a higher low, 11,600. All right, yeah, we were attempting to make a higher low after this move here. That impulse move up, right? Pull back. Now, that impulse move up, if you want to measure it, what you'd expect is a 50 to 61.8% retracement at most. If it's really bullish, you'll get one at the 38.2 that'll work. So here's the 38.2. They try to save it there. right? And you get one of these blue squares that appear to be failing. Okay. The next possible save is at 50 or 61.8. So we're going to look at those blue lines. Okay, they try to save it again. Another blue square. That one fails with a yellow square. Right? So blue, yellow, blue, yellow. That tells this little dance here tells me this location is important. It's an LVN, and they're trying to save it desperately, and it's not working. Right? They tried to bounce off the location here, and then now they're struggling. So this blue square, even though it's got a star on it, it may not work so well when it comes after this impulse move and the pullback. See here too, blue square. So big impulse move, little pullback. It's not in the right location. They immediately beat it. This one, it's in the right. It's on the bottom of the channel where it belongs. Right, but it does not immediately lift. They trade just a little bit below it. They try again, and that one doesn't immediately lift. So we should be expecting it to at least go back to the 50 or the 61.8, maybe the Voodoo range level. There it is. Okay, back to the 61.8. That's this line here. Back to the Voodoo range level as well. 61.8% retracement of this impulse move. If it's bullish, that should hold. Right? I've got the only signal I have on this tick chart to take this is a 2-bar combo. Purple bar followed by a star. The diamond and the arrow help, but really it's purple bar star that gets this, makes this a valid long. It's only valid if that signal, those 2-bar combos are only valid if momentum is in your direction. You do not counter trade with those. So the problem here, so for instance, here, this 2-bar combo, pink bar followed by an orange bar, you can see that stops out first. Why? Because momentum's not bearish yet, right? So the question here is momentum bullish or bearish? So the first thing you look at is the waves. Which color is dominant? Well, right now it's green, right? The up waves have the dominance. Number 2, on my screens, this pink background generally only exists when it's bullish. The problem is we got under that. So my read would be it's probably not bullish, but we might have a scalp. That would be my guess. And it doesn't even work. Right? This doesn't even give us 10 points. Meaning it's not bullish. Right? And so it's possible that one way these blue squares might help me is when they stop out, it means that the momentum has shifted. See, this yellow one and this yellow one are the exact inverse, and they're not getting stopped out. Whereas this blue one and this blue one and this blue one all fail. Right? What I'm thinking is that only exists when it's bearish. So if I then erase the lines, I say, how else could I have known it's bearish here? Well, this was the last down. If I take this little up wave and this down wave, oops, that's not right. I did that wrong. It may not matter. This is the down wave. And this is the very smallest up wave. This would be another way to measure that. It's still the same, right? So when these 2 lines, or these 3 lines, are so close together, what it means is that all of the buyers came in up here. Right? See all that volume? It's actually on this bar here. It's actually sellers. Whatever. On the wave up, all the volume was here. Right? So if I want to draw And then on the way down, all of the sellers, all the people on the way down were just a little bit above that. Here, that pink line here. Once you've gotten below both, and they're close to each other, right? So both of them are close. Generally, it identifies that area as important. Once we've gotten underneath this one with volume, which technically happens here, I can mark this off like this and extend it. It's the best way to do it. It's the lower of the two. They're both basically in the same general location. We got a VPOC, which is the dashes and the yellow line, got below that on a bearish bar that's not purple. So again, let me do this one more time in case this is new. This is part of my process that I do every single day, every single time I make a new high or new low. So I'm going to do it from the beginning again. Because I think it's confusing, right? But it's important. It's an important part of knowing if the momentum is stalling or not. And it's actually one of the only ways that I will take a reversal. So we get pink in the background. Clearly bullish impulse move, bullish momentum. Everything looks bullish, right? We make what appears to be a high, right? And we know that like right here, right? Stops, you actually know it before that. You know it right here. This green wave has ended and we've made a high. We're going to measure you got to decide when that impulse move started. You could measure it from here. I would usually measure it from this one. It's not going to matter. It's going to be right about the same spot either way, right? So that, where is that thing? So, whoops, what did I do? So that line, we can then extend, right? Let's use the lower one just to demonstrate. Okay, we can extend that line. Now, as we're dropping and we get under that, see our price got underneath it? Now we want to measure where all the volume is on the way down and make sure that we got under that too. And we did. You can see that that is higher, but in the general area, same general area as on the wave up. Now we need volume to get under there because otherwise they can just save it and it can like burn your face off, right? Especially to the short side. So I need to get that yellow line on a bearish bar that's not purple underneath that. Then very next bar is bearish, but it's purple. And purple, again, means that price dropped, but primarily because buyers were pulling their orders off the order book. So technically, we got volume below the wave up. And it's lower than where the volume is on the wave from the high, right? But unfortunately, it's not valid for me. It's not enough evidence on this time frame because this move happened so quickly and it was created by sellers pulling their orders that basically influenced the price to potentially go lower than what fair value really is. So when I see a purple bar that does this, I have to wait. It's not yet bearish. I have nothing to do here. Now that I've gotten a bearish bar that's not purple with a VPOC below both of these, now short setups are valid and long setups should be avoided. Okay? Notice I'm not short here and I'm not freaking out, right? The only way to get short here would be to sell this orange bar, which would have been aggressive, right? Because there'd be times where it prints this blue bar or this purple bar and immediately rejects and goes higher. If you're okay with that, but being right 50% of the time or so, you can be aggressive. If that bothers you, like it does me, then you got to wait for the higher odds setup, which doesn't always happen, right? Remember, we're not bullish. So even though this looks like a big bullish impulse move and possibly a pullback, we're not going to pay any attention to this. We're just going to see this as an opportunity to give us a better location to short if it sets up. Because we've already traded with volume below where all the volume was on the up bar and on the down bar. If you want to be sure, you can stretch this down bar all the way to the bottom and you can see that the VPOC does not move. So shorts are not trapped, but there's a long trapped at the high. They're going to probably return to that trapped long and then reverse. Go up Right there. That is my first opportunity to short. Notice the entry is significantly lower, but it's a more conservative entry than this. Now, shorts don't always work on the first try. And it's not a bad idea to skip this because of the location. If you see, you are getting short right into the LVN, which is this shaded area, and you're getting short at the bottom of the channel. If you're going to skip an entry, this is the one to skip. It's not wrong to take it because you waited for the momentum to potentially shift, but realize that if you take this entry and it stops you out, and then the very next bar it drops again, you need to take it twice. Like, that's just part of the process, right? So if that's uncomfortable, you skip this one and you accept that you might miss the short, and you wait for it to set up a second time. Okay, you don't take that because that's bullish, right? You just sit tight. Okay, if you see, it slightly stopped out the orange one and came right back in. This is your high odds entry. If you think you're short and you took this and you got stopped, you need to get back in here. If you skip this, I need to get back in here. This is by far the best entry we've seen. It's a lower entry than this one, and the location is not very good. But because we saw this guy get stopped out and immediately, because think about what happened, right? The market, we have reason to think that momentum is stalling. The market tried to push lower. They found a buyer who aggressively, that's what the star says, aggressively pushed back up and got above this little high. And in reaction, the market then reversed back down to the downside. So that pattern is extremely bearish when it happens after all of the volume is trapped at the highs. So this is your short. It doesn't have to work right away, but that is a high odds short. And if you didn't take it there, it triggers again right here. A purple bar with a red diamond after consolidation underneath the volume is a very, very, very high odds entry. And that rolls down, right? So now, are we bullish? No, we're not bullish. We're still bearish. How would we know when to get bullish? Well, you'd have to have a indication of a momentum shift. That happens when you get trapped sellers, which can be found by putting volume at the lows. Okay, the volume on this move down is here. This bar closed below that. So someone aggressively bought back into the location where everyone sold. But they didn't reach it yet. Do not buy this, right, is what I need to remember. If I'm doing what I'm supposed to be doing and I'm drawing these volume profiles on the waves, I know not to buy this. Even though it's at location, the momentum is way too hard to fight, and I'd be buying right into the point where everybody was getting bearish. I want to be the guy that waits for that level to get taken back and then get a sign of aggression. So here it immediately would, if you would buy that, and technically when it's bullish, that should work. Purple bar followed by star should be an entry when it's bullish. It should work more often than it doesn't. It fails here because it's not bullish. Does it fail? Yeah, it's going to fail, right? Yeah. So it would stop out right there, right? Notice that the new signal, the new blue and yellow squares, they don't just show up when you should be buying, right? They show up at these turns, or we're turning back and forth. And sometimes that's a sign of chop. And that's why I'm not taking them yet as entries, because you need to know your direction. Here, if you knew you were bearish, the yellow squares get you in. But if you weren't sure, you'd be like long, short, and you'd be down like an R by the time you got in here. So you can't just take every one. But what I'm finding is if they show up when you know, if they show up to the buy side when you know you're bearish, it's actually a great trap to get them right after, or to get a star or a diamond. So in other words, blue square followed by red diamond, or blue square followed by purple diamond, or anything like that, when it's bearish, is going to work for a sell, I believe. Blue square when it's, and then orange might also be good. So what I want to see, so like I said, I knew that was the case, and I took this trade on this time frame. So what I want to know now is on the smaller time frame, what were my opportunities, and where might I have gotten a hint that this was bearish earlier on, right? So now let's look at the smaller time frame on the right. Like I said, we already identified that this was an important area to hold. I believe this is the same one, right? No, this is different. This is another one. So this one was important to hold, and we knew that all the way back here. If you were watching the smaller time frame, you knew you needed to hold that or immediately save it. They get under it with price, they get under it with volume, and price goes back up. That's bullish. They tested below it, they immediately save it. Not bearish. Over here, it looks bearish, right? It's a good reason not to take that trade. The two time frames do not line up. It looks bullish on the smaller one and appears to be trying to be bearish on the higher one. Okay, they push underneath it briefly. Immediately save it again. So on the higher time frame, on the smaller time frame, it looks like they can put bars below it with volume and still save it, because this does not go lower, right? Yeah. But it couldn't get volume below it on the higher time frame. And it gave us this diamond on the higher time frame that ended up extending slightly. Not necessarily a buy sign, but might have been able to keep me from being aggressive to the short side. So you can do the same process here. Wave to the high. The volume's all right here. That's why we don't see it, I believe. Yep, volume's right there. Okay. Then we get arrow down star, which is technically a trap of this. Yep. So this is our first, our first opportunity to think bearish is here, because it's a trap back in. It's not a trade I would usually take because you're above the volume. Off the high, we come in like this, and the volume is there. So we need volume below that. I don't know if one bar is enough though. Let's see. So the line in the sand is here on the bigger time frame. Right there. So we get a purple bar below it. It's not usually enough. There's a regular bar below it on the 16. We continue lower. Okay, so this looks pretty bearish, right? So did this. Now, does it? This is technically a buy signal, but I wouldn't normally take it here because I think it's bearish. But it could set us up for a short. So let's see what it does. Okay, that's that same spot, right? On this tiny time frame, it works. You get the sell signal. Well, first of all, the long worked, right? And then it looks like the short's going to work too. You just have to be quick. Okay, you get another sign of aggression to the upside. Where is the volume down here? Oops. The reason I didn't take this on the other time frame is because the volume was too high. Yeah, volume is way up here. Volume's way down there. They're not together. See that? So it's natural. Sorry. Losing my voice. It's natural for price to negotiate between these two pink lines. It's natural. It's not bullish and not bearish. It's just what it does. It goes from one to the other and back. So the way to think about this may be that I don't want to be scalping in here when I know that it's bearish on the higher time frame, unless my target can be these pink lines. So in other words, I could buy this as long as I'm getting out here. And I could sell this as long as I'm getting out here. Now this one didn't reach it, right? No, it does not reach it. It would stop you out and then re-signal. What does it signal with? Like that triple again. The square, diamond, and star all trigger here, right? And remember, we saw that right. Where did we see that over here? Where we had all three. Well, maybe we didn't. Maybe we didn't. I thought I saw that somewhere else. Maybe that was a different spot. But one way or another, that seems to be a pretty significant indication that something might be happening there. You can see that this is also a trap. So we have an apex, which is those little flags that are purple. Right here. Price comes back up, tests just a little bit beyond it, and then immediately goes down. So the traps that show up with this yellow or the blue may be higher odds, even on the smaller time frame. Here, you didn't get a trap off an apex because the closest apex was at the very high, and then there's an apex here, but it rolls over before it comes back into it, right? It doesn't give us a trap set up. It just gave us this purple bar with the diamond and the yellow square, which happened basically at the same time as that. Here. So let's see, where is the volume? Whoops. Where is the volume? I guess this is from a different chart, so I can't erase it. And then let's erase all these. And erase all these. Start over. All right, so where is the volume on this consolidation? It would be here. Interesting. Okay, way down there. So we don't close below that. That's not what it is. Because I found in the past getting diamonds below, getting a close on the diamond bar below that with the VPOC above it can be a pretty good setup. But you can see when you're going in the opposite direction, that ends up failing, right? What about just the wave up? Ah, okay, way lower, that's right. And just the wave down? And what about from the high? Way up there. So this just becomes like a chop zone. And the way to get out of the chop zone is purple diamonds. Purple with a diamond, I mean, is the way to usually get out of a chop zone. Usually star up, diamond down. Works a lot. I have a whole session talking about that. If you are curious about that pattern, there's a I don't remember which one it is, but one of my videos I talk about it like the whole time. Okay, so yeah, so that might be a worthwhile. Oh, it shows up twice, here and here, all three together: star, diamond, and square. Okay, so that could be relevant. I'm not sure. So anyway, we know why we don't buy this, and I knew that in real life. This one is just the two of them, but it's going in the wrong direction, right? And there's no more with the squares here. Okay, so now we have a new low, right? So this is where this wave starts, and it goes to here. You can see you can see that the volume for that wave down is right here. We are closing the candle lower than it. We did not meet that level on the first candle. See that? It closed below it. It also is purple in the background. Generally, that's a sign that it's bearish. So if you're going to take that long, because it is a valid long because of the trap. You can see this. I skipped this trade, but Simon and a bunch of other people in the room took it. So it went under and then came back and closed back inside this range right away, right? So that is a 10-point scalp that I can take every single day. I didn't take it because I didn't like where the volume was, on the wave down. This line here, this white line, is where all the volume is. It's pink right there. It's where all the volume was on the wave down. But I wonder if it's because I'm including it from all the way up here where it started, and perhaps the better place to measure it is here. Yes. Okay. Now that makes sense. And I bet you that's the case on this tiny little time frame too. The actual low is here, right? So in this tiny little time frame, we close above it with purple bar star. And it's a trap. The very first one. Oh wait, this one's technically a trap too. That one stops out by like 2 ticks. And when it comes back with purple bar star, it works, right? Yeah, barely. Barely. But it works. Because your stop goes 1 point under your entry bar. Right? So entry would be anywhere in the range of 615 to 604, and then your stop goes at 604. And so you don't have to buy right here, or you could buy one contract here, and then as it pulls back, buy another one like here at the VPOC at 0550, right? And then hold for 8 to 10 points. It's just a scalp. But that technically works. Did we get any more squares in here? No. No more squares, but we did get the diamond and the star, and that makes sense considering volume was at the low. So here you would think that we'd get back up here to the top of the channel. What happened here? Okay, and we do. Then we get a bearish signal, pink bar, orange bar. It looks bearish to me. I believe that is a short. Here it's pink bar star. All that makes sense, right? Long up to here, reverse, take it short, I would think. Yeah, okay. So as you can see, even though I just spent 15, 20 minutes figuring out that it was bearish, the bullish scalps can still work. You just need to also be willing to flip and take the bearish ones if you're gonna do that, and know not to hold runners here. The hard part is not taking all these, right? Recognizing that it's not time to take purple bar star, that you need a trap back in. But the trap back in trade will work almost everywhere, with the exception of when it's straight down or flat, completely sideways, not moving 15 to 20 points. Other than that, they will work to the long side very, very often. To the short side, they work only when it's bearish, like this. So it traps and then falls back in. Oh, there's no apex here, so never mind. That's not even a trap. It's just pink bar star. So this is the on process entry long, and this is an on process entry long, because you can see that this low got taken out and came right back within one. I took this trade, just like I was supposed to. I took that one. On the smaller time frame, it sets up just as a trap. There's nothing extra, but we got this blue arrow, and like I said, if you can trap people under that, you can get a squeeze. It does not look like they're trapping people under that. So let's see what happens here. You get a scalp back up, which is all you expect. Okay, there's our first blue square. All by itself on a pink bar again. Oh wait, we got one here too, but it was that one. So now remember, thinking about, this is the new low. That's where the volume is. Let's put the white line there. This is where all the volume is. So remember, to determine direction, all I need to do is figure out if you can put a bullish bar with VPOC, yellow line, yellow dash, above volume to the low and volume off the low. So that got above volume to the low. Is volume off the low in the same spot? It's lower than it. So we are bullish. And I know that right here. I know I'm bullish. It's just not time to buy. See, buying this is dangerous. You have to think it's super bullish to buy up there. That's what I was saying later in the day. You can see it tries to go, and then it rolls over, right? Could you have gotten 8 points? Yeah. It works a lot. But does it then continue for 30 points? Not usually, right? Usually it rebalances back down here. So when it does that, it gives you pink bar, orange bar with a diamond. That gives you a scalp. Where does it go back to? The volume, right? Where all the volume was. Tries to get volume below it, can't. Gives you a diamond up. That's a clear long. Notice on the higher time frame, I don't get a diamond. It wasn't fast enough, but I get a square. And that's one of the reasons I added them. If it's bullish, if we've developed volume above the waves to the low, right? Volume, if we've developed volume above where all the volume was on the way down, if we've developed volume up there, the squares start to work. See that? The squares start to work. And it appears that they start to work on both time frames. So that's a long that I got. But now, like I said, it comes into these arrows, which is what I wanted to look at. So now the arrows are pointing down, suggesting that the sellers are absorbing the buy orders. What I have noticed is this area becomes important in the future. So let's mark this all off. There's like a bunch of them in a row. They all happen in the same general location, right? If you can break above them, I believe that location can be used as support later. If you can't break above them, I believe it turns into resistance. So let's just see what happens here. They try to go lower. They bounce off the LVN. They break above them. Do we ever get back to that level? Let's see. I'm just going to cheat and see if this level became important again. They break back to it. They get an arrow in the opposite direction, absorbing to the upside, right? Buyers now absorbing sellers. And that becomes the V. Cool, right? So now here is another one. So if I wanted to, I could mark this off. I could say that immediately that may be a good buy because we've closed above it, came back to it and bought. But that if we can keep going, eventually this area here is probably going to be important. Right? That's how I've used it in the past. It's interesting that they lined up though. It tells me that location, that this whole area, 11,640 to 11,660, it's a really important spot. It's like an order flow location, right? The market's going to decide what it does next based on what side of that location we are. It's where London close was, it's where all the volume was, and it's where all the absorption was in both directions. So let's go back and find the next one. Let's see if this continues, and we'll figure this out. We'll do the squares in a minute. Let's do the arrows first. So I'm looking on this one too, but it should be pretty much the same spot. Okay. So here is an arrow up. It's on a down bar. We beat it, right? The idea would be that once you've gotten under it, that location should turn into resistance. And then what I want to know is if we can't hold it at resistance, what happens? Right? So this was this was the open, right? And so this happened right before the open. Notice we'll do the same thing we did before. This is the very last wave down. All the volume is way up here. Way up here. Generally, the market's going to go back to that location and then stall. Generally. The wave off the low, it's somewhat similar. Right, and it might continue. So we have to develop volume above that before I would even think about being bullish. And especially with this absorption here, getting under that absorption and coming back to it, I would think that it would make sense for sellers to try to defend this. Remember, these levels, you can't use levels on a chart like a brick wall. The market's going to test beyond it, and then you're going to have to observe and see what happens next. So again, we got the blue arrow indicating absorption. We went lower than it. We're now returning to it. What happens? We test above it. Does it act as support? Hasn't really gotten there yet. Did it just never come back? It does not immediately come back. It got stuck. See, there's a low volume node right above it. So I'm talking about this level is here where the absorption was. It's technically, if I want to make a line, it's that little blue dash. It's hard to see. It's this. That little blue line right there, right? So let's get rid of this. That's what the volume is. They developed volume above where the volume to the low was, and then they backed off and they gave this signal, that blue square, which generally sends us higher if it's located right. It's at the LVN. You'd think that'd be okay. This one too. Same exact signal. It's just got more on it at the right location. Those are both longs. And that works. Do we get back to that absorption point? Let's see. It's this white line here. I want to know, does that tend to act as as support? Notice this blue square continues to work here, right? It's just that same buyer. But now look, when they put it in the wrong location, it's up at the top. It's not at support, it's way up here. Notice how they can beat them with yellow squares. So that's a short, in my opinion. I don't know how long it's gonna work. Yeah, it just bounces. And it's the open, you know, but that would generally be, I would expect lower there. Okay, we must come back here eventually. Let's just see. When do we eventually come back to the white line? Oh wait, do we not? We don't. We don't get back to it. Okay, so we don't know what happens when it gets back there, right? I don't think it came back there. It bounces. Oh, it's almost in the same spot. It's almost in the same spot. So it just shifted up and it never got there. Okay. Do we have another one to work with? Let's see. And see, it's not surprising to see these arrows at the open and the close of different, like it makes sense that you'd get absorption when you have a lot of volume. That should make sense. Okay. So let me find one more, and then I'll take a break, and then we'll come back and do the squares. And I'll take a close look at the 16 tick. But like I said, I just wanted to work out. I haven't been using these arrows, and I'm curious if they're useful. It appears they can be for location hunting. I'm talking about arrows that point up that are blue underneath the bars, or down that are red above the bars. They're big. Not these blue arrows, the dark blue ones. Those blue arrows are just momentum signals, and they're only useful in certain situations. Better to ignore if you don't understand them. There we go. There's some right here, right? So this was yesterday, right around 9 o'clock. So this was after, this was like a couple minutes after Econ came out. They absorbed here at the LVN, and they got under it and absorbed here. So let's see. So I noticed they beat it right away, right? So immediately, not surprisingly, they immediately flush underneath it, very, very normal, to test lower than it. Then we almost immediately put volume in above those trapped sellers. Those sellers trapping them, I should say. So they got sellers underneath the absorption point, they developed volume above it, trapping those sellers. It should be long. Yeah. So this and this, those are good scalps to the long side. That I already knew. And I bet anything, this volume, yeah, has already been beat. See that? So we got above the volume, pulled back, gave us a sign of aggression, buy. That works all day, every day. We call it the DVP setup. It does not always go to high of day, but you're going to get 10 to 15 points really often. Okay, now, do they come back to, here's the absorption point, and there's another one here. They come back to the absorption point, and they test over it, they test under it, and now it's resistance. Oh, only once. We get over it. Is it support now? Yep, right there. Oh, and there. Does it hold? It does. Neat. It does hold. Now, the funny thing is it's not immediate. So what had to happen for this to get activated? That's the question. So the absorption here, they got under it. They tried to save it. They got under it again. It acted as resistance. Where's all the volume here? At the low? At the low. They trapped sellers below it. We get the indication to go long here. I'm assuming that the volume here is probably pretty low. It is. So that's definitely a long. And then a green bar down there would be a long too. Well, that one works. Okay, now this is hard, right? You have to identify that this impulse move here, see that? Big volume on the impulse move. You do not want to be shorting here anymore. No more shorting. But your longs need to be positioned correctly. This one is risky. It's not connected to this lower channel, and it's above support. See that? It's if you can measure. If you're not sure, measure these. I showed this earlier, but measure it. You after this impulse move, the first place they're going to try to save it is the 38.2, and the chances that that works are not as good. It's only going to work if momentum is really strong, like a trend day. Right? Trend day up, that'll work. Any other time, you're going to come back and probably fail at the 50 and then save at the 61.8. So generally, you're going to find your longs there. This one does work for 10 points. It's got the blue square, which helps a lot, apparently. Oh, it gives you more than that. So that one totally works. So right there, I would think, okay, we're probably trend day up. I'm definitely not shorting. I'd love to get a pullback, and what's it called? Trap should be bought. So let's see if they trap back in. Right there. So that is a trap back in of the blue one. So it's opposite from what we saw before. We know that when they trap and they give the blue, that it's actually pretty good. I'm curious what happens when you trap, when you get underneath the blue. Does that work? Kinda. Sorta. Yeah, it does. Okay, and you get another blue. If you didn't take it, you get another opportunity here. See, this is a trap too. This one's better. And then you get the blue later. Okay, now, so all that is bullish and that makes sense. Right? But I think what's interesting is if you go back and you identify this level, oops, with the absorption, which happened way back here, and there's another one up here, right? These end up becoming support, look. It's not right away, and that's what's so confusing. So if I mark that off with gray, here, let's make it a different color so it's really obvious. We'll make it like green. Here, that blue is pretty easy to see. Okay, so the aqua blue area is going to become support, but only after you trap shorts below it, right? So here's the trapped shorts. They give you a scalp to the long side, right? This one is hard not to take. Oh wait, this is the trap short. So what happened here? Why didn't this work? What happened here? All the volume is down here. We got above it, came back in, got the green bar. This should be a buy. Oh yeah, and it works. So what happened was they must have trapped some buyers. Ah, there we go. They trapped some buyers in addition. So they trapped sellers, then they trapped buyers. Yeah, buyers trapped. So buyers now need to regain this to have any chance of continuation. They come down to the LVN, they bounce. Shorts you'd think would work here, and they do. Now, did we get some on the smaller time frame? That's the other thing to look at. Did we get some? So here is the absorption. So absorption starts here, underneath, trap sellers, long, trap buyers. Notice this one does not work. Did we get a blue here? No. So when buyers are trapped, these blue squares stop working, and when sellers are trapped, like down here, the yellow squares will stop working. Same with the stars. They will stop working. And the orange bars stop working, right? What works? Going in the opposite direction of the trap traders. Stars up, green bars, and blue signals, right? Once you trap buyers up here, now all the shorts start to work. The yellow stars, the orange bars, the yellow arrows, and the yellow squares. Anything yellow is going to start to work now. And the orange bars, yeah, and the diamonds, they all work. How long do they work? Until you trap shorts. We trap shorts down here. Oh, not right away. Same thing over here. All the sellers are on the top. So this is just consolidation. It's no shorts trapped yet. Yeah, and that's why you get this retrace, and then this is short. That's really key. Okay, and then where do I measure this from? If I measure it from the very top, oh, it's still down there. Okay, so now sellers are at the lows, right? And the very first 24 tick bar, even though it's not a trap or anything, it closes back up, right? We got a green bar at the low, below the channel. It'd be pretty aggressive to take this green bar long. But you can see that we clearly developed volume above the sellers, which were mostly right at this pink line. That's where all the sellers were. We got volume above that. On the way up, volume was even lower, right? So we are, anybody who tried to sell this got totally trapped. So the sell signals are no longer going to work. We are way below that absorption point. That becomes your target, I believe. Now here, we'd have to get volume below that to even think about shorting. And then our target would be back to here. Let's see if we do it. Yeah, see, they can't get volume on a non-purple bar below where all the buyers were. And so the diamonds are still going to work as high. But look, this poorly positioned diamond could trick you, especially on the small time frame. Notice on this time frame, you don't have to worry about that. You just buy the star and you're good, right? But on this tiny time frame, you're going to get this vulnerable buyer, and if you put your stop right here, he's gonna get stopped, and then you might not take this. So if you're going to use the smaller time frame, you have to be really aware of where you are compared to support and resistance and like the channel and the locations and stuff. So yeah, that's important. So then you could participate in this impulse move as a result if you got in there, right? Notice all of the yellow signals fail, fail, fail. Orange signals fail, right? It's not bearish. That's what that means. Okay, now, where do we expect to pull back? We expect to pull back to the 38.2. They try to save it here. They get pink bars here, meaning sellers are just giving up. Buyers are trying to aggressively buy. But if you look at where all the volume was up here, it was way up here, and they got below it. Same picture here. All the volume was at the top. They developed below it, making this a reasonable short that gets stopped, and then you'd have to take this again. Very tricky. The shorts are hard, right? That one here is probably good to go. Notice on the smaller time frame, they did not. They gave you this short, which didn't work. There was nothing here, but then they gave you the yellow square with the diamond and that triple, right? The square, diamond, and star. All three. As long as you're going in the right... I don't know why I can't grab that. As long as you're going in the right direction... Oh, because it's on the wrong time frame. As long as they're going all in the same direction, that is a killer signal, it appears. Diamond, square, and star. I may need to make that, when they all show up, like an alert. Like maybe it makes a noise or something. Because that seems to work pretty often for 10 points. Okay, now interestingly, they do beat that. Right? Because, why? Because we trapped sellers below this absorption, and they've reclaimed it. This blue square is more powerful. That's fascinating. So even though we got these last couple buyers trapped here, let me guess, we couldn't develop volume below these. Yeah. So all of the volume on the way down was at the lows. And as we came up, before we got this short signal, we couldn't develop volume below that. So not only do you have to trap buyers on the way up, but the sellers who react, they can't be at the lows. Otherwise, they get trapped. So sell at the low, followed by blue square, especially if it's got a star or a diamond, seems to be pretty consistent. Sellers at the low, followed by square. We saw that at the end of the day too. And it was a green bar. That made it even stronger. So they trap sellers here. And now that we're in the absorption area, you can see it's really hard for sellers to get any momentum. They try. This is a new high. All the volume is here. But on the way down, see how all the volume is at the low? So no seller wanted to be active up here. They only really got interested once they got down here. And then buyers immediately beat them. Those diamonds, after trapping sellers, are really strong. Especially when you've got absorption in this area. Now look, yellow square is not going to work here. It's not bearish. Oh, it does work. So why does that work? Why does that work? It stops out and then it immediately falls back. See that? I mean, that's how the shorts sometimes go. All the volume from the low was here. We did not develop volume below it. Are they just testing it a second time? Those bastards just try to steal. So again, the very, very highest odds trade is develop an apex, wait for that apex to get stopped out, and come back in. That is your very highest odds trade anywhere on the chart. Literally anywhere. That's as good as it gets. It technically happened here too, but you got here. You did the same thing with this apex. Ugh. This apex got trapped and then came right back. The hard part about this is we made a new high in between, and that makes this trap less good because you could have trapped buyers at the top. In this case, you did not, but you could have. So this becomes fine. This is better because there's no new high. And you'd think that's bad. It's like a lower high. You'd think that's bearish. It's not. When you get a trap like this, what it means is we can measure this again. And if these sellers are at the lows, yeah, and we've closed above them, chances are we're going to trap them. And now they're trapped. So now, all you got to do, oh, I measured that wrong. I included a down wave. All you have to do is get above this, which we did right here, and now it's bullish. That's a buy. Yep. So, and then we come back and we bounce off this area. See that? So that absorption creates a support similarly to a high volume edge. It's very similar to that. It creates opportunities, not necessarily for swing trades, but possibly, but definitely for little scalps like this. And then I believe if they give it up, let's see, when they give it up, which happens, these are all purple bars. Oh, interesting. So they gave it up and they trapped more sellers underneath, I bet. That seems to happen a lot. Oh, nope. All the volume was right in the middle of the absorption zone. They're not ready to bounce that yet, are they? Yeah, see, they're not ready yet. They come back to it, and they just F with everybody there for a while. Now are they trapped? You need volume at the low. Nope, still not trapped. They got volume above it, even though it wasn't at the low. Yep, should be good to go now, higher. But it's not a buy until we get the signal. Maybe a trap would be great. Let's see, do they trap back in off the low? Oh, they give us a star at the VPOC. That's the long. Tough. That's fucking tough. So you get that 10 points. Now do they trap it? A trap here would be perfect. They don't quite trap. I mean, technically it is. It's from way back here, and there's a apex in between. That's usually not a good idea. And you're underneath this. Oh, it's a new low. I forgot. It's a new low. See, I always do this. Now we're going to come back to there. So it might be okay for a scalp, but oh, no, not right away. There. Now we have them trapped, I bet. Still not. Okay, blue square, but they're not trapped yet. I'm pretty sure that fails. Yeah. So you have to be really careful trying to fight momentum. That's really tough. It's really tricky. They can see that the problem here is this support zone again, which comes from way back here where they absorbed pre-market. It was like an area that we could continuously trap shorts underneath, but once it acts, so here's the absorption, this arrow and this arrow created this square. We trap shorts underneath and it created scalp opportunities to the upside, right? Until they trap buyers, and then it was scalp opportunities to the downside. Then they trap sellers back up to, then we should be going back up to here. We do, we get through it. Now they're gonna try to trap buyers. They can't do it here, higher, right? Do they trap buyers here? Here's the VPOC. They get below it. Buyers trapped, right? So now sells should work. Sell, right? Did they trap buyers? Yes. Yes. Sorry, sellers. They trapped sellers right here. So a buy signal, if we get it, should be good. This one technically did work. There's your buy. Yeah. So when you're trapping them down there, it works, right? Now we got all these buyers at the highs, right? And these guys started, I mean, their volume is way down here. Interesting. And this did not make a new high. It was so close, but I don't think it did. So that means I can't sell this. I just miss it. So I could buy that, but it's a scalp. Yep. So do they trap them now? They don't, not yet. Buyer's not trapped yet. Nothing to do for me. See it? Oh, maybe I'm measuring it wrong. Is it this? Oh, it might be this. There. So now they're trapped, and that means orange bars or stars are sells. So that's a sell. Yeah, that's hard. That's tough. See, now it's going to act as resistance, I bet. But see, they come and they collect all the liquidity first, and then they roll it. So that's a good sell. That orange, now that we've trapped buyers up above it, until we trap sellers, these orange bars are going to be good sells. Yeah. You just need to be either ready to flip or else just ignore one side. But see, this is a trap back in, and so you can scalp it back to resistance. It's very tricky to do both, but it's still technically bearish, so that trap works to the short side, and it's bearish until we trap shorts, which just doesn't happen. So that's a short too. The diamond and the star is bearish. So there were quite about, you could have approached the entire day just looking for edges in one direction or the other and been just fine. The place where it gets tricky is where you try to bounce back and forth between, is it long or is it short? And then you take a bunch of stops in a row because you were wrong, right? Or if you try to use this one area and you're just like, I'm going to short below and buy above, like you are potentially going to get trapped on one side or the other. But you can see that it technically did act as support before, right? It was acting as one. The key with these absorption areas, they only are activated. They're not active right away, right? It's not support yet. It's only support when you trap sellers below, and there was a lot of volume down there. And like I said, you can measure it with the volume profile and see that all the volume is at the lows. Now it's support, right? Now that's support. And so, and then same thing here. It'll be support if we can take it back. So right here, buy. Right? Now it's support, buy. Buy. Right? It's buy. Like that. Now it works just like regular support resistance. But once we trap buyers above it, if we give it back, so that's still buy. We haven't trapped them. Right? Now, if you had runners and they get trailed out, now buyers are trapped above. Now it's resistance, right? So you don't really want to buy this. You want to sell this. You want to sell a star or a diamond there. So right? So as long as you know which way, and now you've gotten so far below it, well, now you can start looking for trap shorts. New low. I wouldn't really buy that, but you're probably going to come back up and tag it. So it's still technically a short. Yeah. Now, did they trap sellers? No, they did not. Still short, biased, right? Or did I draw that wrong? Oh, I drew it wrong. One little bar can make a big difference. Okay, so they did. They trapped shorts below it. So now green bars, stars, and diamonds are buys. Buy. And blue squares too, it appears. All those are buys. Buy for scalps. Now it becomes resistance. Did they trap them? They did. They traps buyers above, unless all the volume's at the low. Nope. They trap buyers above. So now it's resistance. So I shouldn't really be buying this. Oh, hold on a second. It didn't work. Did I do that wrong? Here, let me get rid of all the lines. We'll come back to that idea, but let me just make sure I'm not doing something wrong here. So here, I might have drawn it wrong. Oh, all the volume's at the low. Never mind. They didn't trap anybody. They're not together. The volume to the low or to the high and then off the low or off the high, they have to be together to trap them. So there's nobody getting trapped here. This is just consolidation. I've made that mistake before. That's tricky. And therefore, since it's still bullish, bull signals will work. Okay. Tricky. So down there, was there any hint on the smaller time frame down at the low, down here? So purple bar, green bar is a bullish signal, and it worked. Blue square works. Trap back in with a diamond works. Blue square works. Interesting. So the best way to do this may actually be use the higher time frame to determine which side is potentially trapped and which, like, if you just, like, let's look at it from like a long only perspective, right? Like that might be the easiest way to explain this. Like if I go to today and I'm long only, right? So that I don't have to keep switching back and forth. I can just say I will long as buyers aren't trapped, right? So come on, and then I can, once I know that buyers aren't trapped, I can probably look for signals on the smaller time frame to get me long. Let's see. So here's today. So buyers got trapped up at the highs, I imagine. So these are shorts only. This is the high. Once you get below that, assuming that all of the lows, yeah. See, all of the sells on the way down were at the top, and all the buys were at the top of this big wave, right? They pushed volume higher and got underneath it. So now sell only, no long. So none of these longs are going to work. The green will fail. Like this one happened to work, but they won't all work. Like this green will fail, right? You could short, but like I said, this is easier to explain if we just look at it from one direction. So the buyers are going to continue to be trapped until they trap sellers. So if they can trap those guys, whoops, I didn't draw that right. If they can trap those guys, buys will start to work. They trap them by getting volume above it. That occurs right there. Some sellers are now trapped. So now look for buys on this time frame. Unless they make a new low, which they do. So no opportunity, no problem, start over. Nothing lost, right? They could have trapped them, they didn't. They tried, they had them trapped, they didn't set it up. Let's put it that way. Okay, new wave to the low. All the volumes at the low, they potentially have them trapped. Right? And was that known here? No. So you get this signal, you'd have to be really aggressive to take that. Did they get buyers above where all the volume is? They really didn't. They need another up bar before a new low, and they don't get it. They make a new low, start over. So you would have just had to been really, okay, they need to get above that, and they don't. Still short only. New low, they need to get above that. They do. Now, at that point, as long as they don't shift volume up on the way back up, buys should work. In other words, blue squares, white stars, green bars. See, that works, right? And it'll keep working until they trap buyers. Did they trap buyers? No, they're at the bottom. Doesn't mean to hold, it just means don't worry about sells. So, and you can continue, I believe, to buy the longs. So this should work. This should work. Okay, this one stops. Did it set up here? It did not. So the 24 tick worked. The 16 tick worked once and then stopped. And then it's probably going to be a new low. Oh, nope, they trap back in. So that trap is valid. This trap is valid still because there's no new low. And like I said, the 16 tick's going to have some stops. Why did it stop? Probably because volume is at the lows. Oh, no. Interesting. Oh. Oh. They trap sellers. That's interesting. Why didn't I see that here? Did I measure this wrong again? Wave up. At the low. Wave down. They're not together. Why are they together on the small time frame? That's weird. Oh, because it didn't include this little stutter step. So all the volume was here. Interesting. So this one, they on the smaller time frame, they trap buyers, making this orange bar a sell. But it's not valid up here. That's crazy. That makes this a sell too, because it's interacting with this. Does that work? It does. Interesting. So sometimes if you get these little stutter steps, the smaller time frame will give you an early warning of when to stop buying. Okay. Like this one still works, but I would know not to hold a runner because we've trapped buyers on a smaller time frame. Okay, that's cool. All right, new low. Well, to save time, we'll just keep going. But you can see that we're getting signals in here that aren't working. And if I had to guess, if I measure some of these, the volume, we can't get the VPOC on a bullish bar above the volume to the low. Right? So like this is the new low. We can't get it up there. This is a new low. We can't get a VPOC above it on a bullish bar. There. Oh, can't get above it. We got it to it, but not above it. Right? And it's really more valid here. So eventually, and again, I'm just looking at this one-sided because it's easier, but you could technically take the short signals when the longs don't work. So here you're not bullish yet on that time frame. This is a stutter step. See that? Stutter step. So this I should actually pull down to here. And on the smaller time frame, they trap them. See the star at the bottom? Those are aggressive sellers selling at the lows, making this the first place where you can start buying. So now I want to buy and especially if this wave has volume at the lows. The volume is at the high. It might not work. They're not together. Let's see. Does a buy signal work? So normally I'd think that would work. It does work. Cool. What does that look like on here? The same. Okay. And in this case, you can see that the volume, even from this little point, looks like it's way too high, and I would never even think about buying that. But the volume on the way up was at the lows, and you can see that on the smaller time frame, there were trap sellers at the very low. It was just inside. You can see it here. Star down, star up, right? When they develop volume up here and then they bounce it, that actually becomes so this is a difficult pattern to see on just one time frame, but it's a seller that's strong followed by a buyer that's aggressive that doesn't get stopped out and instead gets support. So star down, star up, and then supporting with another bullish signal, right? Where the bearish signals aren't going anywhere. Another way to think about it would be yellow star and then triangle down or purple bar and then green. And that's gonna give you a scalp a lot. Okay, do they trap seller? Do they trap buyers? I keep mixing those up. They do not. potentially do. Oh, right there they do. So now they've trapped buyers. What about on this time frame? Yep. Buyers trapped. Buyers definitely trapped. Stop buying. Ignore buy signals. No buy signals. This one you'd ignore. Goes lower. Okay, so this is at the low, but this is not. Well, it is, and then there's no signal. So yeah, the lower time frame does help. Okay, here we go. Oh, way at the highs. Way at the highs. So this is a scalp back to there. It's such a big distance, and it's natural for it to come back, but it's probably not the low. Notice here's our absorption signal, right? So it from the absorption signal, did we have trap buyers? No. Okay. Does this work though? I bet you it does. Hold on. Let me read. There's too many. DVP. I want this one. Okay. See, it gets back to this level because it's so far away. It's just natural to get back there. And now we've developed volume above the up wave. Can we develop volume above the down wave? Yes. So the only way to catch this V, basically, is to aggressively enter pre-market, knowing that we've got this absorption here, and so if we take it back, it's going to be support, right? So you could get a pretty good scalp there. See that? Maybe even a swing. And then on the smaller time frame, you get this as a continuation signal. So that's kind of interesting. Makes sense. Still bullish. There's another one, right? Still bullish. See, all of these work, right? All these little blue squares. As long as it's bullish, they're gonna produce good scalps. They're gonna stop working once we get buyers trapped. Okay, let's see if buyers are trapped. Yeah, buyers trapped. So now stop buying or sell. But like I said, let's look at this one side at a time because otherwise it gets confusing. So stop buying. So I'd skip. There's nothing to do here, right? I'd skip that. That's technically a sell. That's technically a sell, right? And you can see. Okay, so now do we want to buy again? Well, only if we trap sellers, which has not happened. What about? No. Yes. So here you could buy it. Smaller time frame, same thing, I bet. Wave down is here. Ooh, it's close. Smaller time frame says be cautious. Higher time frame says be aggressive. Let's see which one wins. Higher time frame. Not surprised, right? So blue square after trapping sellers, usually good to go. Blue square after trapping sellers, usually good to go. Green bars after trapping sellers, usually good to go. Remember, this star is not in the right position. It's got to be down here unless it's really bullish. Otherwise, you're better off waiting for it to get stopped out and then buying. So this too, see, it's too high. It's way up high, even though it's got a blue square on it. It's way at the top of this channel. We want them down here. Let's see if they trapped the buyers. Not yet, but they might. And they do. Buyers trapped. Stop buying. So I'm probably not going to buy that. Yeah, see, we got a bar below this. I think the best thing to do is skip that. Oh, interesting. It works anyway. Did they trap sellers on the smaller time frame? Perhaps. They did. Okay, so like I said, way easier to do this one-sided. They trap sellers at the low. Okay, so it's a higher low where they trap sellers at the low. That makes that star okay. Even though, so they trap buyers and then they immediately trap sellers. So it makes this yellow look like it's going to work, but then they get trapped and the star works. Wow, tricky. Okay, so continues. Wow, yeah, and obviously nobody really expected that. It looked like sellers had it here, and then sellers got immediately trapped, and they just effed them. And on the higher time frame, again, if you're on the benefit of only using one time frame is you might identify that we're making higher highs and higher lows, right? And you can see that the dominant side is definitely up. And then I bet if we measure this, I bet you anything, this impulse wave probably got a natural rotation. Let's see. Oh, hold on. I don't have the right tool. So normally you'd get a 50 to 61.8, but sometimes it's 38.2. Ah, wrong freaking tool. Impulse move is to here. Yep, 50%, 61.8 is right here. Right, so 50 to 61. This is where you would expect a natural retrace. After this move, the natural retrace is back into this area. And that's exactly what you get. And then where does the next one come? Right out the 50. All right, that's just natural bullish price action. Like, okay, so bigger time frame, it's clearly bullish. Smaller time frame, there were opportunities for shorts, but okay. So now again, we're going back to thinking, are buyers trapped? And they're not yet. They're not yet. So that it's still a buy. Again, it's not in the right location. It's still bullish. You'd have to. It is really bullish though, right? So you could buy it. It's just a little bit. I would rather wait till we traded under it and then got a star or something. That'd be better. Yeah. See, watch. They're gonna. Oh wait, did they trap? They trapped them, didn't they? They trapped them right here. Buyers should be trapped. So that would make me not want to take this, because buyers at the highs, we traded underneath them. This should be skipped, right? Yeah, they're gonna stall here. So this is the wave to the low. They're clearly below all the volume. This yellow square should be a sell, as should this triple and this. Those are sells. So you miss this one, but you get whatever the short gives us. Yeah. Okay, cool. That process works, you guys. Just like I said, it's a lot easier to see with just one side. But like right here, you could be like, am I ready to buy? Well, where's the volume? Above where I'm closing. Not yet. Sellers aren't trapped. Don't buy it. Right? Well, what about now? Seller's now trapped. You can take this for a scalp. Where? Back to the target, the LVN. On the smaller time frame, not trapped. Trapped here. So this is a buy. Stop goes here. You're good. I mean, and again, it might not look like a lot, but you got to realize if you're buying this, right, and it's anywhere in here, any of this. So like you can get one contract at 15 and then wait for the pullback at 10, let's say. You're getting all the way up to like even 35, right? That's 20 points. That's $400 a contract. Like in my regular job, like a $400 hour would be pretty freaking awesome. Right? So you don't need to catch, even if you didn't take a trade until there, right? Let's say you missed this entire impulse move and you didn't know you were bullish. And right here, you're like, wow, I really wish I would have bought this. Well, don't buy up here, right? Don't buy these signals. Wait for them to get trapped. Wait for sellers to get trapped and then buy this one. Get your $400 and be done, right? And you don't even have to be right. It doesn't matter if the market's going up or down. You can get those 20 points, right? Now, truth of the matter is, after you got those 20 points, if you knew that there's an LVN here and you see pink bar, orange bar, and you know those buyers are still trapped up at the high, you could sell it too, and you could reverse and get another 20 points, right? Now you're up $800, and like I'm probably done for the day if I do that, right? But notice they came back into here. They trapped. Oh, hold on, I can't use the same one. They probably trapped them again. Oh, they didn't. They didn't trap them on that time frame. Nope. They don't trap them there. Yeah, so they stutter. And they trap them right here. So there's the volume on the wave down. They got above it on a bullish bar that's not pink. Any pullback that produces a buy signal, which is basically anything other than a pink bar, good to go. That's a buy. And if it stops out, you take the next one, right? And so now you're up $1,200. There's our absorption. I'd want to measure, make sure we're not buying into, nope, they're right at the top, right? So very dangerous if we get bearish bars down here. Do they? No. They put in a purple bar, they save it. I didn't have the courage to buy this, but that is a buy, despite not wanting to do it. And down in the smaller time frame, it's way more obvious. You've got a wave to the high that ends here. This is the high, right? They try to get under it. It's a purple bar. This is poorly positioned, right? You don't want to buy this. This one, it's really hard not to buy that, right? And with the smaller time frame, sometimes you're going to do it. When you have a pink diamond, these work better at support, and there's no real support here. But then when it gets stopped out and you come right back in again, that's the spot to get in. There's no algo signal here, unfortunately. Let me start over here. Okay, so that's London close, and then it squeezes, right? And in none of these situations do we trap. See, all the buyers down here, all the buyers down here. There's no reason to short any of this with this system, right? Now, do you miss this? Yeah, you don't get that short, but that's okay because it comes back here and it gets you long. No, wait, not yet, because you just so you trap the short, you trap the buyers here. Right, you've gotten underneath these guys, so you don't long that. You wait. That technically, I hate the location, but it's technically a short. And then, now did they trap them? Now I bet they trap them. Now they trap them. Now it's a long. Wow, that's tough. See, and then they put the star in. That's clear indication they are trapped. So you can buy this too. Yeah. And now you're up $4,000. And you better, I should stop. They put in a bull flag. You can see that the volume on this move is way down here. That's what that green background is. If they can't break that, it's bullish. Simple as that. You don't want to buy way up here, really. But if we can get them trapped, you could buy. It really is not a trap on that time frame. This one, this is the low. It's not a trap there either. This is pretty hard for me to buy. Yeah, and it doesn't do anything. And that's not a surprise. Do they trap them now? They don't. They're way at the low. They get under them. They can't get volume under it. That's a buy. You just have to keep supporting it. It hurts, but it's scalping those is correct. All right, you get that interesting pattern here. Interesting. Okay, so yeah, now if you get over this, sorry, it can squeeze. Okay, did they trap buyers now? Yes. Now we're looking for shorts. So that is determined here. It might be too late to take this. That's too bad. So might miss that one. Comes back to the LVN. All the sellers are at the lows. Once again, sellers are trapped. Buy them again. Scalp, right? But these buyers are still trapped, so this might be a sell. It's probably gonna go sideways now. Let's see. Did they trap more? They did. So, yep. So that becomes a sell. And see, if you just do this, if you think about it from a higher time frame, it's the high of day. So that's this, right? So as long as you're developing volume, below this, and you can't retake it, bigger picture, it's a short. So your short signals like these diamonds are going to work well. And it just cascades. I got a piece of that, not the whole thing. And then, yeah, see, you're not going to immediately reverse this because if you think about it, all the volume on this is not at the bottom. See that? So unless you can take that over, this is just consolidation and preparing for shorting. So you short the yellow square, you short the orange bar, and you get another extension. And you keep doing that until they trap sellers at the lows, which still hasn't happened. So I'm not catching that low, that arrow I'm not doing anything with, and I'm selling this. See that? And then I'd have to continually measure to see when now they've shifted volume down. You can't be short now. Now you're looking for longs. Smaller time frame. Looking for longs. And they just V it, right? Oh, see, this is not in a good position. It's a long signal, but it's not in the good position. It needs to be down at the bottom. Oh, they trap them. They trap them at the high. This is a short. That's tough. That's tough. And now this is a long, right? Because they've trapped the higher time frame. The longs, sorry, the short, the sellers are stuck down here, and we can't break them. So this would be a short on the scalp, and this would be a long for a swing. Oh, maybe not. Maybe not. I guess it's just a long for a scalp because then you run into this. And so, oh yeah, buyers are trapped. I forgot. Buyers are trapped up here. So if you can't take this, oops, if you can't take this level back, it's a short. Wow. You really have to be dynamic and ready to go either direction. So more absorption. Again, I don't think I catch that on that time frame. I'm definitely not buying this, right? Because the buyers are trapped. But then on the smaller time frame, when we put in buyers down here, or put in sellers, God, I keep on mixing up. If I put in sellers down here and get above it, now that pullback is technically viable. It just doesn't really set up, unless, I guess here it does. Or if I saw this on this time frame and then saw this on this time frame, I might take it. And that's the only way I can catch that. They don't trap buyers, so I don't sell that. Not touching this. Unless I want to do like, nope, not touching it. So this is just consolidation. Yep, and then that's a buy. Yeah, see? Okay, that's why you don't fuck with this. You don't, like, it's a system that you do not want to fight. See that? Buy. I know it looks hard, but it's fucking bullish now. So it's continually bullish until we get under on the 24 tick. To get a 24 tick entry, we would need to get price under 11,710. On the smaller time frame, on the smaller time frame, we have just recently pushed volume higher at the close. So there may be opportunity on the smaller time frame to develop some consolidation. But notice that these blue squares work quite consistently as long as you got the direction correct. Whereas when you got the direction wrong, when buyers are trapped, they absolutely stop working. Even if you get a diamond and a star with it, it's not good enough. It needs to go with the trend. See that? With the trend. This one kind of stutter steps. That one might, that's technically a stop. This one stops out and then you get it afterwards, but it was bearish, so don't take that, don't take that. Trap sellers, take that. So volume at the lows is the only time I'm really buying. Once they've gotten volume at the lows, I'll buy them. Okay, it's easy enough. So this one's good, yellow. Yeah, I think they do work. Good to know. This one, it's bullish. See, this one works. This one works, and then they trap, but they trap it at the high. But yep. So you don't take this. You skip this one, and you skip this one. This one works because it's bearish. This one works because it's bullish. See that? This one works because it's bullish. This one works because it's bullish. The trap off of it works because it's bullish. Okay. I mean, that alone, now it's bearish, right? Blues are going to fail, work. Yellow will work, blue will fail. Now it is bullish, works. Now did they trap buyers at the highs? They did, so don't take the blue ones. He's going to fail. Neat. All right, well, I've got some things to look at, that's for sure. yeah, hopefully this has been at least entertaining, if not uh, educational. But I've definitely figured out that I want to take a closer look at those yellow and blue squares and start using them for entries when we have buyers trapped. I can take them, the yellow ones, and when we have bears trapped, I can take the blue ones. And it looks like it works on the smaller time frame as well. And trapping buyers and sellers on the smaller time frame works in addition. So I'm going to keep watching. Wow, I really fucked that up. I'm going to keep watching both time frames and try to see if I can't respond fast enough to trade some of these 16 tick moves. And